But the first proper bout of rains in Mumbai, and it's not stopped since, so that's a welcome change. We're coming to you live from the CNBC-TV18 News studios. I'm Prashant. With me, my colleague Nigel, and Rima is here with us as well. Guys, hi, morning.
Hi, good morning. And for the first time, it's rained in north of India at the same time as Mumbai. This never happens.
Yeah,
right?
I visited North last week. Kidding. No, actually, it's really good because, we say out here in Mumbai, it's hot and it's sticky. In the north, it was terrible. I mean, the rains will be a big relief out there. So I'm happy. I mean, I got the credit from my in-laws, so I'm really happy.
But typically, rains and monsoon come a good month after it hits Mumbai. I'm saying this is the first time, timing-wise, that monsoon has hit both Mumbai and Delhi at the same time. Right? So just underscores the climate change problem that perhaps we're all facing.
Absolutely. Well, will the climate for the markets change a little bit for the better is the question, because it worsened a little bit. Last 2 days especially, it worsened. So let's just quickly run you through what you need to know. And I want to start with not the Nifty, but the mid-cap and small-cap part of the market. We had the first negative weekly close. Friday to Friday markets, both small-cap and mid-cap indices were down for the first time after 12 straight week of gains. That's how strong and uninterrupted this run higher has been on both the mid-cap and small-cap part of the market. So that's the backdrop, which was basically where we left off on Friday. Now, the backdrop from a global arena is not so positive. So you got the Nasdaq, which was down about 1% on Friday. The S&P was down 0.75%. I mean, Nasdaq and S&P have had their own records broken. So the Nasdaq has snapped its 8-week winning streak. The S&P has snapped its 5-week winning streak. Right. So again, they're also after uninterrupted non-stop run, things are stalling a little bit. This is a stunning statistic. Now, and this is something which we've been highlighting for the last one and a half months. S&P is made up of 500 stocks, but if you take just 493 stocks, S&P 493 stocks, and look at an index made up of those 493 stocks, it is flat in 2023 so far. The other 7 stocks, which are all the mega cap tech stocks, Amazon, Microsoft, Meta, etc., they are up 55% this year. So that's how stunning the divergence really has been. And that's how narrow it has been, the narrow ever, I think, out there in the US. And that's the reason why opinion is very, very divided, whether this will broaden out or, the market in the US needs to give up some gains and come off. We will hear from global central bankers. There's the ECB forum, which runs through today and tomorrow. Global central banks, the FOMC is also represented there. So I think you'll, over today and tomorrow, hear some noise. Come into the market here on levels you need to be cognizant of, mid-caps and small caps. I think, now is the time to just assess, take a step back and assess and not dive in, because often when things are changing, if a certain trend is maturing, there will be a period of certain confusion, consolidation, sideways action before a new trend finally emerges. We are not sure if the uptrend is, seeing a meaningful maturing, which means a deeper pullback is due. And I think we will know that by tracking some levels. So the Nifty on Friday closed exactly at the 20-day moving average. That number is 18,668. We closed at 18,665. That's how close it was. So we need a decisive close under the 20-day moving average to say that, the uptrend is maturing and maybe we get a bit of a deeper pullback. The same level on the upside, of course, is the all-time high. We got to within 1 point of it. On the bank Nifty, we need a decisive close under the 40-day exponential moving average. The 20-day, of course, is long gone there. 43,504 is that level. We left off at 43,623. On the way up for the bank Nifty, nearby level to watch out for is 44,042. That is a recent high, after which the market actually came off a little bit. So, just some levels. But as I said, sit back, assess. The SGX is indicating an absolutely flat kind of start. And we'll take it from there. Rima.
It's a fairly calm start, considering the news flow over the weekend, the Russian rebellion, extraordinary, unprecedented. So the only impact that we've seen right now is in the energy markets. The equity markets are not seeing any great impact, but crude prices have inched up marginally. Also, bear in mind that last week, crude prices had seen a slump of nearly 4%, but we are seeing Brent inching towards $75 per barrel. When it comes to the Asian markets this morning, as I said, broadly calm. China and Taiwan are reopening today after a 2-session break. So the profit booking, the risk off that we saw last week, towards the end of last week in global markets, is impacting the Shanghai market, which is down close to about 1%, and the Taiwanese markets, which is down 0.5%. Stripped of that, it's pretty flat. Hang Seng is flat, the Japanese index is flat, and the SGX Nifty suggesting a flat start. In terms of the factors to watch today or this week, in fact, we spoke about the global, you've got the Q1 final US GDP numbers. Jerome Powell will be speaking. Back home in India on Thursday, we've got the monthly expiry, track the progress of the monsoon, and we've also got 3 IPOs hitting the market. One of them opens today, India's largest drone manufacturer. But tomorrow, you've got an electronic manufacturing company called Sign DLM. And towards the end, you've got a construction and development company called PKH Ventures. So these are some cues for the week.
Well, you know, Rima, last week, the winning streak for the Nifty, the mid-cap, small caps were broken. I don't think it's such a bad thing because this market was running up and maybe it was running up a little too quickly. And also, there was some signs of frothiness in the broader market. So near-term pullback, well, that was pretty much okay. But in the near-term trend will be determined today. You know, you'll get a sense whether or not we are still going to be going to those all-time highs, or maybe, in fact, the second option is maybe we pull back and then move to those all-time highs. So that near-term trend will be determined today. Last couple of sessions have been quite disappointing. We've come off around 90 to around 100 points in the last 2 sessions. We've ended closer to the low point of the day. So it's been a little bit disappointing. Now, crude on a week-to-week basis, well, it's still lower, so that's okay. It's popped up a little bit from the lows, but it's still lower, sub that $75 per barrel mark. And also we have monsoons that are picking up, which is obviously a good sign. It appears that Russian situation out there is pretty much under control from blowing up, is what the street was a little bit fearful on Friday night. Now, the FIs, well, they continue to remain net long on the index. And the option side, you're not getting any big data points, both on the index options, on the buy side, as well as on the sell side. Though, in terms of writing, they wrote more calls than puts. And let's pull up 2 strikes. 18,700 call, 18,700 put. 18,700 call, by the way, is getting written very, very aggressively. You know, close to around 65 lakh shares getting added there. So plugging in the numbers, going with the premium out there. On the downside, 18,625. That's the range for today on the downside. And on the upside, 18,783. If we break the lower end of the range, then maybe we slip to around the 50 DMA. So we'll have to keep an eye out on that mark. The positive on Friday, though, was though the Nifty ended closer to the low point of the day, the Nifty Bank took support and it ended above the 50 DMA in Friday's trading session. So that's the broad range that you're looking at for the Nifty Bank. SGX Nifty suggesting a more or less flattish start. I think if we pull back a little bit, you keep 18,625 as your stop loss going by the cues and hope that we finally see a bit of a pullback out there. You want to buy closer to the lower end of the range. So let's see how this one goes.
All right. Well, that's basically what you need to know in terms of levels and the setup. Well, Jonathan Garner is now joining us, Chief Asia and EM Equity Strategist at Morgan Stanley. Jonathan, good to have you with us here. Thanks for waiting. Prashant this side. Are Asian markets in a bull market? Jonathan, I mean, that that question seems a little weird after the kind of year that we had last year, but this is an incredible year so far. The Nasdaq is up 30%. The S&P is doing what it is doing, and here in Asia, many markets are up 20-25% from their last year lows. Go on.
Yes, so we called a new bull market in Asia early last October, and we thought, as with previous bull markets, it would be led by North Asia. And broadly speaking, that's what we've seen. So Japan, Korea, and Taiwan have all performed very well, China less so. The Indian market was actually relatively slow to get going this year, but is now actually performing well. So yes, we did reach a trough in valuations last October and also a peak in ex-ante US real rates. And the global economy, despite many cross currents, is actually performing reasonably well still at the moment.
Jonathan, morning. In March this year, Morgan Stanley upgraded India's weighting to an equal weight as the relative valuations improved. In October of last year, India was very expensive. In March of this year, the valuations were reasonable. That's when you decided to go ahead and upgrade India to a neutral or an equal weight rating. But since then, the Indian markets have seen a rally of nearly 10% on the index and far more when it comes to the mid and the small cap indices and the stocks. So are you comfortable with India's valuation right now, or is there a risk of a valuation-led downgrade given the recent run-up?
So if you go back again to last October when we were calling at the beginning of a new bull market, India at that point was all-time expensive to North Asia. So trading about 2.2 times on a forward PE, the overall emerging markets or Asia ex-Japan index, and that was extremely rich. And so India did underperform early on in the rally, but a lot of that valuation excess had corrected by the time we got to March, so only about a 1.6 times forward PE premium then. Now, that is high compared to history, but do bear in mind that India's ability to generate earnings versus other emerging markets has steadily improved over the years. So paying about a 1.6 times forward PE premium is reasonable. And India has now participated in the rally. It's certainly not leading the rally. The leading market in Asia this year has been Japan, and Japan FX hedged has been our top pick in the region this year.
Hi, Jonathan. Good morning. Nigel on this side. Jonathan, have you factored in, Korea being reclassified as a DM? We had a couple of notes that came in last week, and it appears that at some point of time that could happen. Have you factored in? If yes, when? And what could the potential impact be on the other emerging markets like India?
Yes, I think you may be referring to competitor notes. On our team, we have not been expecting Korea to be upgraded to DM status, anytime soon. So we don't think that this is an imminent change for Korea, and therefore it's unlikely to have much effect on the overall emerging market index.
Got it.
Jonathan, so what happens from here for the rest of the year? What's the call for markets like India and other markets in Asia? Will this run continue?
Well, clearly we've seen over the weekend that geopolitical risks remain elevated, the situation in Russia and Ukraine. We also continue to have upward pressure on US interest rates at the short end of the curve, which needs to be monitored. And again, I just caught, your introduction to this interview. We did have corrective price action last week in quite a few markets. We're heading to the Northern Hemisphere summer, which typically, after a year like we've had, a very strong year, does cause some profit taking through July and August. And then we'll just see where we get to in early September, which then tends to set the trend for the remainder of the year. But the overarching point remains that the broad Asia ex-Japan emerging markets universe was exceptionally cheap late last year on fears of an imminent tumble into global recession, and that simply hasn't happened this year.
No, so, Jonathan, are we starting, in your opinion, so July and August, maybe there is some pullback, but are we starting is it possible that we perhaps will start a global upcycle, or you think that's unlikely? Upcycle equivalent to kind of a bull market, global bull market, or you think that's extremely unlikely?
Well, again, I caught, the show just before coming on, and you were right to highlight the leadership in the S&P 500 has come from a relatively narrow group of stocks. But that's about the appearance of a new investment thematic, which is generative AI. And that has an enormous impact on parts of the Taiwan, Korea, and Japan markets. So at least from that perspective, in terms of a new investment theme that's captured investors' imaginations, we are in a new bull market.
Jonathan, just talking about the near term, this heavy bout of profit taking that we saw towards the end of last week, is this possibly going to lead to a deeper correction in July and August? How do things play out just in the near term?
Well, from a purely technical perspective, some markets, some segments of the market are overbought. But again, everything really hinges on the ability of the global economy as a whole, and particularly the leading parts of it, which is US, Europe, China, and Japan, to deliver a decent GDP growth environment and therefore a good environment for corporate earnings growth. And that's looking pretty constructive as of right now.
Jonathan, within the Indian markets, I think financials, consumer discretionary, and parts of healthcare as well as what you liked, I think so. Has anything changed, or are these the top three themes in the Indian markets?
Well, what's exciting about the Indian market is a 6% plus GDP growth environment with a relatively subdued inflation situation, the prospect for the RBI to be able to reduce interest rates at some point in the first half of 2024, a currency that is much more stable than in the past, and a fiscal position that is basically improved. Together with rising inward FDI and portfolio investment, the environment is quite bright for India at this moment. But we are more interested on domestic demand plays, as your question suggested, rather than the exporting part of the Indian market.
Jonathan, some of the other big structural changes which are happening and have been highlighted quite a bit in global media as well, which is India getting a lot of manufacturing setups. Companies committing investments here. Just a quick word on that. Is that going to be the big overarching theme which will play out over the next many years? And are you confident that that will play out?
Yes, we are very confident. We've done a lot of work about what we call the transition to a multipolar world dynamic. And in that multipolar world dynamic, the sheer scale of the Indian economy, its population, and the improvement in infrastructure, so the way that the ports work, the way that the road system has been built out, and many other aspects of infrastructure, that these all speak to the ability of India to take on a bigger role in global manufacturing. And so this inward FDI trend is an exciting part of the overall India story.
All right, Jonathan, thank you very much for joining us. It's a pleasure having you with us here on the program. And, thanks indeed for being here on CNBC-TV18. All right, that's Morgan Stanley's Jonathan Garner with a view. So maybe in the very near term, over July and August, I mean, as Jonathan pointed out, purely on the back of seasonality, things may look a little weakish perhaps. But otherwise, I mean, things have been looking very good. And India, as he pointed out, was slow to start participating, but is now catching up with other markets as well. Rima.
We've got some more opinion for you. On the equities, Sanjay Mukim of JP Morgan says, unlike the center, which exceeded the initial revenue forecast for FY23, most Indian state governments missed projections for the year and managed deficits by spending less than budgeted again. Most of the cost control was on account of lower revenue spent, though state capex also disappointed. Slower inflation, nominal GDP, will limit state revenues further in FY24. Combined with lower deficits at the center, we expect government fiscal impulse to contract. Private and household sector will have to take up the task of driving growth. This will require continued credit growth. They prefer banks, two-wheelers, staples, and real estate.
Okay, Lawrence Blanker of CLSA says there is little change to the outlook for the Nifty as the market's advance off March lows has lost momentum as it tests overhead resistance at the 18,363 to 18,988 area provided by the 2021 and 2022 highs. The loss of upside momentum is indicated by the developing price momentum divergence that is formed between the May and June highs. It would take a break above the resistance of 18,363 and 18,988 along with momentum confirmation to provide a fresh breakout signal for the Nifty and provide an initial upside target of 20,980 and then 22,650.
Let's get you some money market views then. On the rupee, Kunal Sudhani of Shinhan Bank says the weekend news from Russia and China allows the euro bears to take a breather. The dollar index continues to find support at 102.3 levels. Chinese yuan has still been on a depreciating front. Brent crude and the US 10-year treasury yields will continue to consolidate. For the USD INR pair, Kunal sees 81.9 against the dollar to act as a support, while 82.25 will act as a resistance.
Well, on bonds, Ajay Maglolia of JM Financial says that in the absence of any significant cues, yields will remain steady, but the overnight momentum in US treasuries and crude prices may influence our own market yields. He expects the 10-year benchmark to trade in the range of between 7.06 to 7.11%.
Well, that's about entire market setup, equity calls as well as money market calls. Time to slip into a short break though. On the other side, we get you the top stocks that you need to track. Don't go anywhere.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be, it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal?
Welcome back. It's a brand new week of trade, a truncated one at that, and it's time to drill down to individual stocks because the SGX Nifty is suggesting an absolutely flat start. Our entire research team is standing by. This is CNBC-TV18's list of top stocks for the day. Mankalam, first up, you're looking at ICICI Securities and HDFC Life.
That's correct. You know, for ICICI Securities, we were all wondering why is it that the stock has rallied about 8% on Friday itself, and most of the gains came by in the last hour. And now we do know that post-market close, there was a notification coming in that the board of the company is meeting on June 29th, which is Thursday this week, to consider delisting of shares. And that's interesting, largely because, one, the stock has been rallying recently. It's just about 2.5% from its 52-week high. The promoter of the company holds close to 75% stake. For the delisting to go through, you'll have to have majority of the minority shareholders go ahead and pass that. And you have, in the public shareholding itself, the public holds 25%. And in that, what LIC and government pension fund do is extremely crucial. LIC holds about 2.6% stake. The government pension fund holds about 3.1% stake. For the company to go ahead with the delisting, first we'll have to have the board approval, and then the due process will take course. After an 8% rally, I believe that the stock will continue to rally today, mainly because of this delisting news. The other one that I'm watching out for is HDFC Life, and that's because they've received a 940 crore GST demand notice for July 2017 to March 2022. They've deposited about 250 crores against this, and they are saying that they will legally challenge this 940 crore notice. Now, the stock has been on an upward momentum over the last few trading sessions. So, basis this, if there is a bit of a decline, maybe some stronger hands would enter at lower levels. So, we'll watch out for that.
Thank you very much for that. I'm also watching Apollo Tyres today because over the weekend, the company held their investor or corporate day. They also took a lot of analysts to their new Andhra Pradesh facility or plant. So at the corporate day, the company has reiterated its Vision 2026 guidance, which is a revenue of $5 billion by FY26. Last year, they ended with $3.1 billion. So they are looking at about a 17% revenue growth from FY23 to FY24. They also reiterated that margins will improve. Last year, margins were at 13.5%. They're saying it will be more than 15%. They reiterated ROCE targets of 12 to 15%, and the fact that the net debt to equity will continue to remain under 2x. The margin levers highlighted by the company include stronger growth in the passenger vehicle segment, where profitability is higher, premiumization in industry in terms of sale of higher rim size, market share gains in the premium passenger vehicles category. Of the Andhra Pradesh plant or the facility that analysts visited, it's operating at near utilization, but there is scope to improve the capacity by 3x in the near future. So the company did indicate till FY25, they're comfortable in terms of the capacity. There was a Nomura report which also went on to say what the company told them in terms of the demand environment. They're saying the near-term demand is healthy in the truck bus radial segment, but it's weak in the passenger car radial. They expect volumes to grow by high single digits in India this year, but exports will remain a bit subdued. EU exports could be flat this year. So that's what Apollo Tyres had to tell analysts over the weekend.
All right, Rima, thanks for that. Well, more stocks with news flow. Sonal is here with that list. Sonal, hi, morning.
Good morning, Prashant. Let me start with Godrej Properties. Now, last week, company had announced acquisition of a Kolkata land. This time, they've gone ahead and bought a land parcel in Gurugram, which is approximately 15 acres. And here as well, they plan to develop premium residential apartments. So that stock is in focus again. We have Chalet Hotels because they have a board meet on July 3rd to consider fundraising. There would be a lot of fundraising options where they would also be looking at refinancing their high-cost debt and raising further funds from the promoters of the company for one of their project. So that stock is in focus. RVNL has emerged as the lowest bidder from Maharashtra Metro Rail Corporation Limited, and the project cost is around 395 crore rupees. So that stock also continues to be on our radar.
Thanks a lot for that. So now, well, let's hop across to Vivek. He's tracking a couple of pharma-related names. Vivek?
Well, good morning. A couple of pharma stocks on the radar. First on our list, Ipca Labs. The regulatory concerns, especially from US FDA, continue for this company. So two developments over here. US FDA actually inspected the company's Pithampur facility from June 15 to June 23rd, and they then issued a Form 483 with 8 observations, a slightly higher number. Along with that, CNBC-TV18 also managed to access the Ratlam facilities US FDA Form 483 that was issued. Remember, they had 11 observations from this particular inspection, and this particular inspection was conducted from June 5th to June 13th. Among some of the key observations, which are slightly concerning, non-identification of root cause for failures. It does not appear as though Ipca could come out of its regulatory overhang quite soon. The key thing to watch out for Ipca, remember, 3 of the key facilities, the Piparia, Pithampur as well as Ratlam facilities, continue to stay under an import alert since 2015. The other pharma stock on our radar, Zydus Life Sciences. What's actually happened is the company's subsidiary, Zydus Animal Health, has acquired 6.5% stake in MyLab Discovery Solutions. This particular acquisition was done from Rising Sun Holdings, a company backed by Adar Poonawalla. They've invested 106 crore, which values the company at close to 1,631 crore. This particular acquisition marks the entry of Zydus into the diagnostic space.
Okay, well, thanks very much for that, Vivek. Let's go across to Nimesh now, who's standing by with block deals data. I mean, that's been the theme in the market for the last many weeks. Nimesh, what do you have? Good morning.
Hi, morning, Prashant. So first is landmark cars. As expected, some large marquee names have bought into the Friday's block. So 3M India Fund managed by Prashant Jain, he was a big buyer. Abacus Asset Management backed by Sunil Singhania, they were large buyers. Unify Capital, some domestic mutual funds including Bandhan Mutual Fund, Nippon AMC, ICICI Pru Life and Goldman Mutual Fund, they were large buyers in landmark cars. The stock was up 8%, but it looks like the momentum may continue in today's trade as well. So that's the first one. The second was Sterling and Wilson. We did report about Paology family members selling out. So that's a confirmation. They sold 1% stake. In terms of buyers, BNP Paribas Arbitrage Fund was a large buyer in the block deal, and other names like Setu Securities and Shastra Advisors were other buyers as well. So these two names both will be in focus, landmark cars as well as Sterling and Wilson.
Okay, all right, Nimesh, thanks a lot for that. Well, here's a quick recap of all the top stocks that we need to focus on. Stocks with positive news flow include Apollo Tyres, ICICI Securities, Godrej Properties, Chalet Hotels, RVNL, Zydus Life Sciences, Landmark Cars, and Sterling and Wilson. Well, a couple of stocks reacting to negative news flow include HDFC Life and Ipca Laboratories. Well, that's all the stocks we need to focus on, but let's get in Vivek back on. He's going to run us through some brokerage notes for the day. Vivek?
Well, good morning. A couple of key stocks to keep on your radar. One positive and one negative. So let's start with SBI Cards. Nomura has come out with a very interesting note on the company. They've downgraded the stock to a reduced rating, and they've cut the target price quite sharply. Target price has been cut to 700 from 1,030 that they had earlier. What they're saying is that in this particular business, profitability continues to remain under pressure. Also, what they're saying is that the credit card industry growth is moderating, and more importantly, SBI Card continues to lose market share. What they're saying, the stretch valuation that the company is trading at currently 5.5 times book value 1 year forward, and almost 26 times price to earnings is something that does not leave any scope for error as far as the execution is concerned for SBI cards. But on the other hand, when you're talking about property stocks, Jefferies in fact is quite positive. They have their top picks as Godrej Properties and Lodha. What they're saying is that data that they have analyzed from property consultants, as well as continued high housing market activity levels, that the real estate market is quite strong. Residential pre-sale momentum is continuing well into the first quarter of FY24. Inventory is still quite low, and that is what is driving double-digit price gains across cities. So what they're saying is that most of the players that have given a 10 to 20% pre-sales guidance, they should be able to achieve it quite comfortably.
Thank you very much for that. That sums up our individual stock, the news flow that we've got on individual stocks. Let's talk about commodities. Manisha Gupta joins in as always. Manisha.
Yeah, thank you so much for that. I'll start with the crude oil prices, where we have seen some strength return in Asia right now. We did see 4% of decline for the crude prices in the previous week, but the support comes in from the fact that Russia's brief rebellion by the private military group is something that is impacting the supply disruption sentiments around the world. Remember, Asia, especially India, has been importing record amount of crude from Russia, so we have seen that premium come in for the Asian markets as well. Not so much for the metals as a sector, because the weak PMI data that we have seen come in sense of manufacturing and services from the major developed economies is what's weighing onto the market. The data has been on the weaker side, and the street is awaiting more stimulus coming in from China. Until that happens, we are looking at a range continuing in case of crude oil prices. But a sharp decline is what we are working with in sense of the gold prices. We have seen a 3-month low of $1,910 per ounce in the gold prices. For the Indian markets, the prices declined all the way down to almost at 58,000 rupees a 10 grams. That has been nearly 9% of a decline from an all-time highs that the gold price has hit in this year itself.
All right, Manisha, thanks very much for that. Oil and gold, well, we'll keep an eye on commodities as well with Manisha later as well. We'll take a very quick break here. Prakash Devan will be joining in for some fundamental stock talk. Later, we'll connect with the management of Idea Forge Technology to talk about expectations from their IPO that opens today. Stay tuned for that conversation as well.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time, it's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters.
Welcome back. Well, the IPO market as well is picking up steam, and IdeaForge, their 570 crore IPO opens today for subscription. Out of this 570 crores, 240 is going to be fresh issue, 330 crores is going to be the offer for sale. Their promoter stake will reduce to around 30% odd post the issue. The IdeaForge Technologies CEO, Ankit Mehta, as well as the CFO, Mr. Vipul Joshi, both of them join us on the show. Hi, Ankit and Vipul. Good morning. Thanks so much for joining in. Well, it's been quite a journey, right? From building one of the first quadcopter drones to enter, a college fest, and now you're looking at a 2,800 crore market cap. Wow, big journey. But you're demanding top dollar valuations. So, I wanted a couple of numbers from you. First up, your working capital days seems a little bit elevated at around 300 days. Maybe most of your business is with the government, so that could be one of the reasons. But could you tell us, what is this number likely to look like going ahead? Either of you could take the question.
Yeah, so
Good morning.
Go ahead, Vipul.
Right now, exactly, you rightly said that it's 300 days. But going ahead on an average, we're expecting it to be around 200 days in the subsequent timeline. Largely, the impact is, yes, we deal with defense as a prime customer. Plus, there is an impact on the overall inventory days as well, which is also because of the timing of when we took the numbers. If you look at the March, we were sitting with certain finished goods, which would then subsequently get delivered, etc. So sometimes some of these timings do matter when you're taking and closing these numbers.
Got it. Yeah, inventory days is a substantial part of that, more than 200 days. So we take that point on board. So steady state, you're saying the net working capital days will be around 200 days instead of 300 days that was last reported. Now, there's tremendous potential, right? That's the buzzword out there for the drone industry that you are into. Give us a couple of details. You can't give us guidance about the growth for this year, so we let you go on that. But when you list, then we'll want that number. But what is the total revenue potential? You're doing a little under 200 crores odd. With the money you're getting, with the investments you've made, what is the peak revenue potential the company can deliver?
So when we look at the market opportunity, right, what has happened is that over the years, in fact, particularly post the pandemic, the opportunity has actually started to shift from being a good to have technology to a must have technology. And with the amount of impetus that both the government and the policy is doing for the industry, at this point in time, the potential is looking very exciting. To give you examples, one of the schemes that the government of India has is the Swamitwa scheme, where the government is mapping all the 660,000 villages in the country and creating property cards for villagers where the houses that they've lived in for generations but have not had formal ownership of, they will first time have that formal ownership of those houses. So these schemes, several states are getting into full large-scale resurvey of their lands. We are getting into the mandatory use of drones for national highway mapping. We have mandatory use of drones for using in mining. Then, of course, we have the defense side of the house where we are looking at a very, very large potential and a urgent need to induct the technology given what we've seen for the last many episodes.
Ankit, the potential is massive, and I'm looking at a note which states that currently the industry is around $43 million, I think in FY22 odd, and the potential is that it's going to go all the way up to around 800 million. So potential is big. My question to you, what is your revenue potential? With the current investments that you have made, you're building a great business with big potential. But what is the revenue potential that you can reach? If demand picks up, you get your orders, etc. Go ahead.
So, when we look at IdeaForge's potential, the way we have to look at it is that we are obviously not going to be in each and every segment of what the drone industry is going to comprise of. And we are going to look at particularly segments that complement our, you can say, market size, market scale, or complements our approach in terms of the industry. So today we are looking at most of the potential that is going to come from the surveillance side of the house and the mapping side of the house, which are the two large-scaled opportunities as far as this industry is concerned presently. And then there are many other sectors which we will not be a part of presently. For example, we're not a part of spraying, etc.
Right. Sorry, Sorry for interrupting. Good morning, Prashant here. Good morning to both you and Vipul. Ankit, so from these two segments, what's the revenue potential according to you? The two that you're focused on right now. Is there a number in mind?
So, you see, potential, Prashant, we have to look at it from multiple aspects, right? So, there is one in terms of the total market potential, the total addressable market. Then that runs into, for just our country, runs into a few $1 billion for both of these segments put together.
Okay, got it. So, I mean, fair enough. That's the TAM, a few $1 billion. Of course, market shares, etc., will determine where you guys finally end up at. Vipul, what kind of growth? Just a quick run through, right? So, defense and mapping is the two areas that you are focused on. Could you tell us a few simple things? What is the replacement sort of cycle for the drones that you manufacture? Is it a single product dependence that you have? On what parameters does profitability depend on? Because many more companies are getting in, and since this is a not very new technology but emergent technology, I'm assuming prices will go down. So, what is the margin profile going to be? Just a few things, Vipul.
Yeah. So, see, we have distributed product line today from as low as a 25-minute system to as high as about 2-hour system is the various segments that we are delivering. Our revenue is distributed between a defense and civil is how we demarcate the market today. Large part of past few years, revenue has been defense, while we see that the civil share will slowly increase. And that's the reason why we are also looking to further our efforts in the drone as a service side of things. While there is not single dependence on one product line, continued efforts on how we proceed and develop the technologies for drone going ahead, as well as how we are continue to be differentiated in the market, whether in domestic as well as internationally, would help maintain the margins. And again, the revenue mix or the product mix on how customers are looking at the particular drone as a usage. Every usage and every use cases will have its own, so to say, margin segments, wherein we'll see that if wherever our top of the line marquee products are there, we would continue to enjoy the healthy margins.
Got it.
So, I wanted to add, Prashant, that when we look at the margin structure, right, for IdeaForge, I think it is pertinent to note that the entire technology stack that we have is largely designed by us ourselves. So our ability to command margins has been good because of the fact that for the same technology product, if let's say, for example, somebody else were to buy 100% of a subsystem, we will only buy the bill of materials of that, and we will be adding the technology layer on top. So that
you
also,
have more,
and the depth,
you have more control over margins, basically.
Yes,
got it.
Yes.
Absolutely.
All right. Now, we will. I have to ask you this. There is this note which has been circulating, right? Claiming all kinds of things. It doesn't have a name in terms of who the author is, but it does allege a lot of things. It talks about fraud, embezzlement, drone crashes, FIRs, and whatnot. It's a long note. I'm sure you guys have gone through it as well. You have, decent sort of anchor investors who've come in and shown faith in the IPO. So that's a vote of confidence. Right. But how do you respond to the note, which I'm sure both of you have gone through in detail?
Yeah.
Right. So Prashant, go ahead. Yeah.
Yeah. See, right now, some of the facts that I would like to lay out, and then we can go into the some of the matters that have been laid out. See, IdeaForge is not like last 4 or 5 years old company. IdeaForge is a 16 years old company with 62 patents filed in, 25 of them granted world over. IdeaForge's drones have done about 350,000 flights in the hands of the users. And we have been developing technology in-house since the day we started. And that has been our forte. We are today also present in international market. Our subsidiary in the US has been open since last September. We're also promoting. We now, if you see, We have also launched a product which is the world class.
Vipul,
your RHP has all the details. The question is, will you respond to these, the allegations in this note? Have the regulators because the note says they've also sent this to SEBI, etc. Have they reached out? Just the current state of affairs.
Have you all received any formal communication, Ankit and Vipul? We want to clear the air on that front. Have you all received any formal communication? It's been doing the rounds on WhatsApp, so we want to understand that. And have you all responded to it very quickly?
So we have already disclosed anything which was material and relevant. We have already disclosed it in the RHP. And in terms of, responses to the regulators, we have already placed most of our responses to the regulators as well. And in terms of, other facts, we do not have any facts supporting a lot of other
Ankit,
things.
After this note circulated, you reached out to the regulator and provided facts, or they reached out to you?
Yes, of course. Yeah. We have reached out proactively.
Okay, proactively, and you've kind of given sort of a response. Will you make that public as well?
We will have the regulators guide us on that.
Okay, but you've not heard anything after that from the regulator, after you've sort of... Okay, nothing at all. All right.
All right, Ankit and Vipul, thanks so much for stopping by. Well, we'd like a few more numbers from you all, like the revenue potential. I think your operating cash flows are negative last year, but as you say, the working capital comes under control. That will help your case. Wishing you all the best with regard to this IPO. And on the day of listing, we're looking forward to having a more detailed chat with both of you all gentlemen. Well, for the time being, though, we'll slip into a short break. Coming up next, Anuj Singhal joins us for a quick trade setup. Post that, we'll bring you the top stock picks from our technical as well as F&O experts.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement. Both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal?
Okay, welcome back. There's 12 minutes to go for the pre-open session. Anuj is here with a quick check on things. We've got the SGX indicating an absolutely flattish start. Anuj, morning.
Morning, Prashant. Well, you know what? Over the weekend, I traveled to Pune, and the thing that stood out for me is the progress of monsoon, especially over the weekend. That should hold market in good stead, given where the Nifty has corrected to, which is the 20-day exponential moving average. I think today is crucial. You find out the trend of the market, because so far you've defended the 20-day exponential moving average 2 or 3 times. The only problem is the broader market, where you've seen painful action over the last couple of days, and we need some stability signs over there to sort of resume the rally. The Russian news obviously turned out to be a non-news, so the market can move on. And if the monsoon progresses well, my sense is you could again go back to all-time highs. On the Nifty, Friday's low was 18,647, and current 20-day exponential moving average is also 18,647. So that's the importance of the level, and that's also your first big support, 18,600 to 650, and the bigger support zone is 18,500 to 18,550. At higher level, the resistance is placed at 18,725 to 18,775, and bigger resistance is 18,800 to 18,880, where the Nifty has struggled 3 or 4 times. One more issue is that HDFC twins are sort of fighting a lone battle for the Nifty. On the Bank Nifty, it was very interesting. If you see the FIs and F&O, there was quite a bit of buying in Bank Nifty futures while they were selling in Nifty futures. And like we pointed out last week as well, HDFC Bank has bottomed out. But there's no sign of bottom formation yet in the sentiment makers, which is ICICI Bank and State Bank of India. You need some more stability in these 2 stocks. Now, the support zone for the Bank Nifty is 43,500 to 43,600, but keep an eye on 43,345, which has been the June low. If you start to break that, then there's a distinct possibility of the Bank Nifty going back to the 200-day moving average, which is placed at 41,800. I'm not saying we're going there, but that's the risk which opens up if you start to break 43,345. On the higher levels, first resistance is placed at 43,824, which is Friday's high. And of course, the bigger resistance is where the Nifty Bank has been struggling all through the month of June, 44,000 to 44,100, which has been the high for almost 5 or 6 times. Let's see if the monsoon progress can actually help the market and put a bottom to the recent fall, especially in the broader market.
Anuj, thank you very much for laying out the market for us. Let's also invite Prakash Diwan on the show now. Prakash, one of the big stocks of the day is going to be ICICI Securities. ICICI Bank has said that they will be meeting on the 29th of this month, that's later this week, to consider delisting of ICICI Securities. Now, ICICI Securities as a stock has languished ever since its listing. It listed in 2018. So more than 6 years ago, the issue price was, I think, 520. It's hardly moved up to levels of about 560, 570 currently. In comparison, you've got Angel One, which has literally skyrocketed ever since its listing, particularly in the last 2 years. Your thoughts on this rationale of ICICI Bank to delist ICICI Securities, and what should shareholders do now?
Good morning, Rima. So, I think the answer is it lies within your question. The stock hasn't really done much in terms of creating value for the bank as a subsidiary, which would have grown into a significant asset on the market, that is. But the operational performance, if you look at like any other large broking house, continues to be very promising. The cash flows are extremely strong. But probably the rationale or the logic behind this is, instead of kind of trying to compete with in the listed space within the broking, scripts, you have the bank would probably, rather depend on this company in its portfolio and continue to use it for its captive selling of so many other products. And remember, there's going to be a lot of changes in the market once HDFC Bank and HDFC come together in terms of what all it can do to, selling home loans or products around that. Mortgages is going to be a very different market now that both these companies come together. So I think everybody is bracing up for getting in-house strength rather than, kind of relying on something just for the sake of having it as a separate entity. On a standalone basis, whatever it's done, probably it could do better if it was to be within the family, within the fold. And it makes things much easier for them to put money into it for international operational, expansion or, new kind of products on commodities. And also, I think the rationale will be probably give depth, a lot of depth to the business, but don't kind of, let it be in the market for so many other reasons where competitive valuations and all of those kind of start factoring in. But for shareholders, I think it's an opportunity to probably make some money because it's not going to be easy for them to be able to get it delisted at the first attempt. And once the pricing kind of gets discovered, it would probably be more favorable for. So just hold on. That's what I would do if I had the share. I don't have any shares of this company, but if I did, I would probably wait for a better price realization from this.
Okay. All right. Prakash, thanks a lot for that. But we'll request you to just stay on for a little bit more. We have a lot of questions for you. For the time being, let's get in our technical experts. We have Mitesh Thakkar as well as Shrikant Chauhan, who joins us on the show. Morning, gentlemen. Thanks so much for joining in. Mitesh, you go first. What's the trade on the index? I think you've been avoiding the index and focusing more on stock-specific action. Today, what's the call?
Morning, Nigel. Yes, we have been doing that, and I think that call remains the same. The idea is that the index is a sluggish, ranged kind of a movement, which does not offer you much trading opportunity. So, for the time being, I believe that 18,640, 650 on the downside to about 18,850, 870 on the upside, which is a very narrow 200-point kind of a range, remains on the Nifty. While for the Bank Nifty, it's slightly wider, but on a percentage basis, very similar kind of a range, 43,400, 500 on the downside to about 44,150 to about 44,250 on the upside is the broad contour. So I think both the indices are not giving you directional signals. The volatility indicators for both the indices are turning flat. Therefore, trading them may not be a very good idea. Though, of course, short-term traders can look at buying closer to the lower end of the range. 18,650 for the Nifty if you want to buy. Take a 25-30 point kind of a stop loss. See if you can get a 50-70 point kind of a bounce back and exit over there. I think that those kind of strategies can be taken, but from a directional point of view, not much juice over there. So trading is stock specific.
Okay, gentlemen, good morning. Shrikant, what about you on the index? What would the call be?
A very clearly formed double top sort of formation. So in case if we see any rebound in today's date on the back of some specific flows on the domestic front, then close to 18,800, 830, we should look for creating some short positions with the stop loss at 18,900. On the other side, if we see the market is breaking the levels of 18,630, then certainly we should look for creating some short positions below the levels of 18,630, because in that case, we can expect some trending sell-off in the market, which will send the market to 18,000, maybe 500 levels. So broadly, we are of the view that we should look for reducing some position if there is any rebound in today's date or maybe in this current week.
Okay, so you're looking to pare down your holdings in the index if there is a rebound, and perhaps the Nifty could head down levels to 18,500. Shrikant, any individual stocks that you would recommend for trade where there is some interesting price action?
Yeah, good morning, Riba. Well, for taking any trading call in the market, I think we should look for adding those stocks which have fallen in the previous week and which are still showing a lot of strength. In that space, we like Ashok Leyland, which is currently around 162. It was around 172, 175. From there, all the way it has corrected back to 160. So from here, I think the risk-reward ratio is quite favorable to buy. Keep a stop loss at 157 for adding any long positions. Again, we can expect 175 and in the best case, 180 levels. For creating short positions, I think PSU banks are under a lot of pressure, and there we are expecting furthermore weakness. In that, Canara Bank looks weak. There we should be seller with a stop loss at 302. On the downside, 280 or 275 seems achievable.
All right. Mitesh, what about you? What picks do you have?
Nigel, I have a mix of buy and sell calls. Pharma as a pack is looking very strong, Aurobindo, Dr. Reddy's, etc. So I picked up a buy on Dr. Reddy's. Keep a stop at 49.55. Look for targets of around 50, 90, 50, 100. The second buy call is HDFC AMC. It had a gap up movement last week on Tuesday, and then it's given a pullback and now it's near the support areas. The structure is positive, so warrants a long trade. Keep a stop at 1990. Look for targets of 2075. And on the sell side is Hindalco with a stop at 415 for a target of 392, and UPL. That's weakening a bit. That's a short-term sell with a stop at 676 for target of 642.
Okay, all right. Thanks a lot, gentlemen, for that. For the time being, we'll slip into a short break. You come back, we'll get you pre-open rates. We'll also be joined by Madhukar Lada of Nuvama Institutional Equities. He'll be talking about the trends in the insurance sector. Stay with us.
I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the
Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, we're almost getting into pre-open, so let's get you some derivative strategies. Chandan Taparia joins us to help us out with exactly that. Hi, Chandan. Good morning. What's the strategy on the index, and run us through your stock calls as well?
Good morning, Nigel. Thanks. We have seen some profit booking in last two trading session as Nifty fell to surpass the lifetime high of 18,888 marks and corrected towards 18,650. But yesterday, like on Friday, even after the decline, the volatility was also falling down, which indicates that again support may emerge. And the good part is that even after the decline, the index is continuously respecting to its 20-day exponential moving average. And we have noticed that multiple times in the recent rally, the index tested 20-day and turned higher. So we believe that 18,650, 660 zone, which is the closing, needs to hold. Then only some uptick could be there. And overall, we are expecting the range-bound bias as we are heading towards this expiry week. So we have noticed put writing at 18,500, call writing at 18,800, 19,000. So we believe that 18,442, 500 could act as a major support. 18,800, 888 could act as a major resistance. So index is likely to be in this broader range for next 1-2 trading session. But in that, if manages to hold 18,666, then we can look for some bounce of 100, 150 points in the Nifty index. Now looking at the Bank Nifty index, on one side, when Nifty is respecting 20-day, Bank Nifty is respecting to its 50-day exponential moving average and has been moving in a range with call writing at 44,000. But we have multiple support near to 43,333 level. So 43,333 to 44,044 is going to be the trading range for the next couple of days in Bank Nifty index. So now what to do in this scenario? You can either go with buy on decline or can go with selective stock specific action, or can initiate the option strategy to deal with the time decay and the lower volatility market scenario. Now looking at the stocks, we have positive on the Nifty Pharma Index. We believe that after the corrective move of last 4-5 days, Pharma Index should move up and selective pharma stocks can see some uptick. So including Oro Pharma, Dr. Reddy, these are the stocks which are adding built up of long position. So here I'm recommending to buy on Dr. Reddy. The stock is continuously making higher top, higher bottom on the weekly chart, holding well above 5,000 marks. And because of that, some short covering trigger could be there as we are heading towards expiry week. In the entire series, the stock is up by around 10% and added open interest by around 17 to 20%, which clearly indicates that built up of long position and rally can extend towards 5,200. So one can buy Dr. Reddy with a stop loss of 4,900 for higher target. Second trading idea, there is buy on Bharti Airtel. Stock has given a consolidation breakout of last 15-17 trading session, added open interest by 20% in this series with surge in the price. So expecting some uptick towards 910, one can buy with a stop loss of 837 level in Bharti Airtel.
Okay, well, thanks very much for that. Chandan, good speaking with you as always. Prakash is still with us. We think we're getting rates in the pre-open as well, so we should have them up. We have the rupee starting to trade and the Nifty on your screen, 13-14 point change, nothing. ICICI Securities, of course, is up 20% in the pre-open, naturally. I mean, they'll have to, the promoters, the bank will have to pay top dollar, I'm assuming, to get the shares off the market if the delisting is to be successful. 675, 676 is where we are at on that one. Prakash is with us. Prakash, any thoughts on Landmark? There were all those blocks that happened. This is the premium car dealership network. I mean, frankly, I was surprised with the kind of names on the other side. As a business, do you like it? Do you think it's scalable in a very large way?
Good morning, Prashant. Yeah, so I definitely feel the business is very promising, given the fact that when there's so much of competition in that segment hotting up, and you're kind of the value of each of the vehicles that you are selling is constantly going up and at a very rapid pace. There's no reason why you don't make money on that business. The ROEs are very good. You really don't have to invest too much beyond the initial capex. Interestingly, this model has not worked for the not so premium segment. So you have models like Competent Auto and all, which have been in the listed space for ages. But so when Maruti came into India, they actually spawned this whole thing of dealerships across India, networks being created. So you have the Kataria Motors and you have the Chogles. Everybody got into it. The dynamics are very promising. Very few actually need money to grow, and that's why none of them have got listed beyond a couple of them, as I've mentioned. But Landmark has, a very interesting model to go only into metros and cities where these premium cars sell. So by virtue of that, there will always be a niche which is growing fast, and people love that. So it is great visibility of revenue. Whether I would pay so much of a valuation at this point in time, that's the question. I mean, so, there are takers for this because you have money which you could deploy for the next 5-6 years and ride on that premiumization curve. And then that's precisely why, there's been so much demand for the outgoing block. So that's where it is. Great business model, but, you could debate whether this is pricey enough at this point.
Prakash, thank you very much for joining us today. Look forward to chatting with you through the course of the day. Let's now talk about the insurance space. It's been buzzing of late. Madhukar Ladha, the director at Nuvama Institutional Equities, who looks at the insurance sector very, very closely, joins in with his call. Madhukar, morning, and thank you very much for joining in. First, just the big picture, a top-down call. Can you highlight the key insurance, the trends that we are seeing in the insurance sector, and whether you like or dislike the sector? And talk about the valuations as well.
Good morning, Rima. So the insurance sector has seen a lot of volatility. We've seen sort of a change in tax regime, increased taxation on policies which are of ticket size of over 5 lakhs. This also meant increased sales in March. So you saw a lot of high ticket sales of insurance products. Surprisingly, and this also shows the resilience of the sector, that despite a very strong March, April and May have been relatively good months for the private sector insurance players, and some of the unlisted private sector insurance players are really doing well. Premiums are growing at sort of 20% year over year. The listed guys' performance has been slightly more subdued. My sense is that there is inherent need for this product. Second, we're seeing regulatory regime become more favorable towards insurance companies. So commission caps have gone. You have total expense of management sort of regulations. They're giving more freer hand to these companies. You have now use and file. So the regulator is very pro-industry. That is also helping growth for these companies to come through. And valuations were very attractive after the budget. And that, again, was very sort of favorable and helped these companies and made these stocks attractive for investors to go ahead and buy. And that's what, in my sense, has led to this recent rally that we've seen in these stocks.
Madhukar, but where from now? What happens? You think they can?
So I think valuations are still quite comfortable. So an SBI Life trading at about 1.9 times price to EV, or an HDFC Life trading at about 2.4 times price to EV on an FY25 basis is still very attractive and much lower than long-term averages. Of course, getting to the long-term average will take some time because this year still we have a high base towards the end of the year, and VNB growth may not be as strong as what we've seen in the last couple of years. But nonetheless, I think the long-term view on the sector remains very solid. We have a lot of scope of increasing protection growth and increased guaranteed savings product sales. All these are good high margin products. And I think the sector should continue to do quite well.
All right. Hi, Madhukar. Good morning. Nigel on this side. Madhukar, what about LIC? Do you track it? Any view out there?
So we obviously passively track LIC. Now, it is a good, strong, large, solid business. But in my opinion, a large part of the valuation comes from the mark-to-market equity book. And the insurance business actually is much lower in the entire scheme of things for LIC. And most investors would then just prefer owning, the broader market rather than LIC as a stock. Also, I think there can be some improvement in their disclosures. And lastly, obviously, growth for them has been more subdued. So the private sector life insurance companies are growing at a much faster rate, and LIC is not able to. So he's obviously losing market share as well, and that I think will impact its valuation. So I expect LIC to continue to trade at a substantial discount to the private sector life insurers.
Okay. Anything, by the way, just before we let you go, Madhukar, anything special happening with Max Financial? Anything expected there? Because stock was a huge underperformer even within life insurers. Last 2 or 3 days, it's run up quite a bit.
Yeah, I think I have not come across any sort of news or there is no such anticipated news as of now, not that I'm aware of. Having said that, I think it's more of a valuation play. So it's trading much lower even now to the other life insurance companies. So it's trading at just about 1.4 times price to EV. And I think, in late stages of, bull market run-ups, I think these sort of catch-up moves happen. That's my sense on the recent move on the stock.
Okay. Well, thanks very much, Madhukar. Great speaking with you. Thanks very much for your time. Appreciate it, as always. Well, 9:12, so a little late for our 9:10 calls, but Mitesh is with us. Mitesh, what do you have?
I'll go with a buy on Dr. Reddy's. Keep a stop at around 49.55. Look for targets of 50.90 to begin with.
Okay. Thank you very much for that. Let's go across to Nimesh, and he's going to be telling us a little more about the expected delisting of ICICI Securities. Nimesh?
Thanks, Srinivas. As you rightly pointed out, the board of ICICI Bank is going to meet on June 29 to consider delisting offer for ICICI Securities. Now, iBank owns 75% and 25% is with the public. Within the public shareholders, 6%, a large chunk is between LIC and government pension funds. So they will be the key to the delisting offer. But what I understand from sources that this particular delisting will be via scheme of arrangement, which means there will be a share swap with ICICI Bank. So it won't be a cash exit for the shareholders of ICICI, but it will be basically a share swap with ICICI Bank. So all the shareholders of ICICI Securities will get shares of ICICI Bank. So the share swap ratio would be important to watch out for in the June 29th board meet of ICICI Bank. So stock will be in focus. It rallied 8%, may open again gap up in today's trade.
Okay, all right. Thanks a lot for that, Nimesh. It's up close to around 15%. Vivek joins us as well to tell us about Nomura on SBI Cards. Vivek?
Well, that's right. So, like we mentioned earlier, Nomura has downgraded SBI Cards. What they've done is they've downgraded the stock to a reduced rating. target price has been quite sharply to 700 rupees from over 1,000 rupees target that they had earlier. What they're saying is that going forward, this particular business, the profitability will continue to remain under pressure. Also, what they're saying is that the credit card industry growth itself is moderating, and SBI cards, even within that, is losing significant amount of market share. What they're saying is that the industry landscape is changing with an increase in riskier consumer segments, and what they're saying at this point of time is that the stretched valuations, almost 5.4 times book value FY25 and almost 26 times EPS, that the company is trading FY25 is something that is still quite stretched and does not justify, which is why they've gone ahead and downgraded the stock.
Okay, all right. Thanks a lot for that, Vivek. Just a couple of seconds now to get us the official rates. The pre-open rates are already in, and the Nifty is going to be starting off in the green with a gain of close to around 16 to around 18 points. The Nifty Bank as well is indicating a positive start. That's indicating a start in the green with a gain of close to around 100 points or thereabouts. Remember, in Friday's trading session, the Nifty Bank went down to around 43,450 and bounced off that mark. That's where the 50 DMA comes in as well. The advance decline ratio for starters firmly in favor of the number of stocks that are advancing in comparison to number of stocks that are declining. Last few days have been a little bit off with regard to the mid and the small cap indices, but maybe not such a bad idea when we saw some bit of pullback or a correction. First rates are in. The Nifty is up close to around 20 points. The top gainers on the Nifty this morning, well, we should get them up for you on the screen. Tata Consumers up close to around 1.5%. UPL is trading in the green with a gain of close to around 1% or thereabouts. On the flip side, what's dragging today is HDFC Life. Remember, wrap on the knuckles. That stock's down close to around 1.2% odd. And Adani Enterprises, a quick downtake out there. That's down close to around 2% as we speak. From the tech names, TCS is down close to around 0.7%. Ultratech Cement is pulling back this morning. That's up close to around 1% or thereabouts. And Divi's Laboratory as well, trading in the green. Now, from the broader markets, you have Shree Cement. That's down close to around 6 to around 7%. Remember, the last few days, the stock has been getting knocked back because there's an IT survey that's been conducted at a couple of their plants. That's why that stock's down close to around 8%. Numbers have been doing the rounds, but no official comment. The management has said that they're looking into it and they're cooperating with officials. We'll have to wait for an outcome on that front. Ipca Laboratories as well down close to around 4%. So those are the two big movers from the broad markets. But Rima, what else?
Well, Landmark Cars, that's opened out with another gain of 2%. This follows the near 8-9% rally on Friday. Very large marquee investors have bought into the company in the block deal on Friday, and that share price continues to move higher. You've also seeing a bit green on the screen when it comes to RVNL, where the company has been won some orders, L1. In fact, they have been winning quite a few orders of late. ICICI Securities continues to top the charts in terms of volumes as well, 10% higher on that. Godrej Properties has opened up mildly in the green. Zydus Life, via a very small investment, the company will now be entering into the diagnostic space. So the news over there has pushed the stock up by close to about 0.5%. Apollo Tyres, though, is a bit subdued. It's opened with a cut of nearly 1.25%. They had an investor day on Saturday where the company reiterated its ambition to achieve $5 billion of revenues by FY25, improving margins to more than 15%, but the stock is sulking in trade. But all in all, it's flat opening on the Nifty and the Sensex. The mid-cap index is struggling a bit, so the mid-cap index is down close to about 0.5%.
Well, 15 points on the Nifty, as you said, Rima. So 18,684 is where we are at on the index at this point. So still trading, just keeping head above the 20-day moving average, like what we did on Friday. Friday, of course, was too close, but here we are putting some distance now. Shree Cements, as Nigel pointed out, is the big loser. It's coming up with large volumes for a name like Shree. It's down almost, I think, 8%. So 23,232 on Shree Cements. So that's the big one. Adani Group stocks were all under pressure on Friday. I mean, actually, ports and enterprises and others not in the Nifty as well. They were all down. Adani Enterprises is down another 2.5 on volumes this morning. We've got Ipca Labs, which we mentioned, down 4%. SBI Card is down about 2.33%. I think there is a downgrade on SBI Card this morning. Shriram Finance continues to pull back. Both Piramal and Shriram were losers on Thursday and then Friday, and they're both sort of back below that euphoric moves that we saw post the block deals, where Piramal sold out of Shriram Finance. Adani Transmission is down a little bit. Total Gas is down about 2%. Adani Green is down about 3.5%. So there is some selling here in this group. Rolex Rings is down about 4.33%. 2,081 on Rolex rings. And if I go down, volumes will start to become a bit of a problem. They need to pick up a little bit more to come back and look at this. We were just talking about Max Financial having done well over the last two sessions. But this morning it's down just, 0.5% or so. Overall, it's neither here nor there. Blinking red and green on the Nifty. So the 17 points are gone for now, but we'll come back and take a look at things in just a bit from now. I'm just scanning the markets for stocks which are higher. Parag Milk Policy Bazaar, I think there was an analyst day. Policy Bazaar is up about 2.5%. Then there are, I think, a few others. MapMy India, we had the management with us on Monday morning. MapMy India was a decent gainer on Friday as well. And this morning, it's up another 3%. More and more stocks starting to participate. Market breadth is positive, but the opening levels were some 2.5:1. That gap is now closing.
Consumer names are doing pretty well. So your top Nifty gainer right now is Tata Consumer. That's up 2.3%. HUL is up 0.75%. ITC is higher by 0.5%. Today, you've got the Hindustan Unilever AGM. And tomorrow, Rohit Java will take over officially as the CEO. Up until now, he's been the CEO designate. But Mr. Sanjeev Mehta will be stepping down after being at the helm or the CEO of the company for more than a decade. So the street is going to be watching the AGM very closely, and whether the growth, which up until now was led by pricing rather than volume, is that something which is going to be changing? Will we start seeing a pickup in volumes for HUL rather than a price-led growth? So HUL, keep your eye on that. And another stock, Infosys, because the company has won a pretty large deal. They won a deal from a Nordic bank. According to the contours that have been shared by the company, Infosys will be getting close to about $450 million in terms of not annual revenues, but revenues through the course of this deal. But as a part of the deal, the company also has to acquire the IT center of this bank, which houses close to about 1,400 employees. So when that happens, typically the margins are on the lower side. So yes, there is going to be a revenue potential of $450 million. That's the deal size. When you take over the IT operations of their center in Bengaluru and you take over 1,400 employees, the margins are on the lower side, at least initially, till you can scale it up.
Okay.
The stock is not very enthused, clearly.
Yeah, absolutely. 1264 on Infosys, absolutely flat. Tahir Badshah is now joining us, Chief Investment Officer, Equities at Invesco Mutual Fund. Tahir, good to have you with us here. Good morning. Thanks for joining us here on CNBC-TV18. Just a quick word, Tahir. I want to start with, of course, we'll get to markets in a bit, but so many blocks, right? All around us with promoters, private equity, early investors diluting, but on the other side, matched by very strong demand from marquee institutional investors in many cases, long-term investors, etc. So, for example, let's take a stock that you own in one of your funds, Timken India, where we saw the promoters sell down a very large chunk. What do you make of it? If you want to just use that as an example to talk us through what we are seeing.
Well, it's a valid observation, Prashant, and there are always two sides to the coin, and this is at one level, of course, something which is concerning, and we have to probably be a little watchful about this because it's happening across the board and in quite a number of instances in different forms. What happened with one of our stocks was something which was once again quite unique and not really happened before. So to that extent, I think there's different avenues are opening up whereby promoters want to probably take advantage of the current valuations and the current excitement. But I think it's also part of the other part of it is that many of these businesses are actually in good momentum and doing really well, capitalizing on the current demand conditions, particularly those which are leveraged to the investment cycle and the manufacturing cycle are clearly seeing these kind of times after a very long period. So I think there is, in situations where probably beyond a particular point, the ownership doesn't really stall anything or doesn't really change the complexion of the company or the actions of the management. I think that is where we'll have to probably differentiate and draw the line. So I think we are watchful of that. We make sure that corresponding portfolio actions are undertaken in order to manage those risks. But I think it has to be weighed in the light of the fact that you might probably continue to see this good performance and momentum around, particularly the larger universe. We are seeing that the broader markets are doing very well and may continue to do so.
Just sorry, but is there a is there a comment on valuations and what promoters themselves think the business is worth, and should investors take note? I get your point that so many of these businesses are doing well, and if if the shareholding change doesn't impact the business, then not very much to look there. Siemens, for example, right? There was that slump sale which happened, and there was a lot of complaint that they've transferred the business at a much lower valuation than what it was worth. But then that is, where you can argue that is the management's assessment of what the business is worth, and not what the market has done to the share price here. So how do you view it briefly?
So again, Prashant, each of these situations has been different, and we have to evaluate differently. I mean, you mentioned the example of Siemens. That's been a different experience, and in the case of Siemens, we've probably seen this happen on earlier occasions as well. So in the past, so I think investors will probably differentiate in the course of things as to what one implies versus the other. So I don't really think we can probably paint everything with the same brush. But yes, I mean, any of these kind of situations will create a certain amount of uncertainty and unsettle the investors. You have to bake it into valuations as well. Probably be a little cautious about your portfolio exposures and to the extent of exposures that you have. But I'm saying many of these are actually good quality businesses at the end of the day. I mean, run by many of these are MNCs or probably even domestic companies, very capable management. So I think you have to be choosy about where you want to, what is the kind of valuations that you want to accord as a minority investor versus that of the promoters, versus what the promoter probably thinks.
Tahir, morning. Rima here. ICICI Bank is your top holding in many of your funds, FlexiCap, Contra Fund. What have you made of the decision to delist ICICI Securities? Your thoughts?
Well, it came to us as a surprise. I just happened to see it in the morning, so we didn't really get I'm not sure whether ICICI Securities as an entity probably, on an aggregate basis makes a lot of difference to the overall valuation of ICICI Bank. But without commenting on individual stocks, I don't really think it changes our opinion about this stock as such, one way or the other. We don't really own ICICI Securities in our portfolio, so to that extent, I don't really have much to comment on that.
No, but what could be the rationale? What's driving this move?
I'm sorry, I lost your question. Can you just repeat, please?
No, I'm saying what could be the rationale of ICICI Bank to delist ICICI Securities? I agree it doesn't move the needle on financials in terms of valuations of the behemoth, but what could have sparked this decision, according to you?
Well, I think they are pretty close to the 75% mark, so probably that may have weighed on their decision making as to which way they should probably go. This is also a business which beyond a particular point doesn't require as much of capital over a period of time. So if at all there is any compulsion at any point in time to approach the market from a capital raising perspective or from a financing perspective, maybe that is also not necessarily required in this kind of a business. I'm just speculating here. I don't really know what exactly would have gone into the minds of the management, but maybe these could have been a couple of reasons as to why they would have probably come to a certain conclusion here.
Okay, all right. I just hold on to that thought. Tata Consumer, that's the biggest gainer on the Nifty. Citi has come out with a note on Tata Consumer, and they've initiated with a buy rating. They're saying it's transforming into a complete F&B player. So I guess that's one brokerage that's having its impact on that stock. It's up close to around 2.7%. And Shree Cement, that was down close to around 8.5%. That's pulled back a little bit. It's still down close to around 5%. Remember, the street is concerned about a high pedigree name, well-run company, suddenly having the stack survey out there. So that's one. And Adani Enterprises has done a U-turn from trading in the red. That's moved well into the green. Well, Tahir, we were talking about the couple of banking names in there as well. I'm looking at your portfolio. You have ICICI Bank, HDFC Bank, and a couple of other names as well. In the contra fund, you have HDFC Bank. Now, that's being a big underperformer, a relative big underperformer in the last 3 months, if I look at it in the last 3 years. In the pecking order, do you think HDFC Bank's time has come? Because the debate is open out there. Near-term NIMs could compress, but maybe at these valuations, it could look up. Your take?
That's precisely why it actually features as probably at this stage the number one or the number two holding in our fund, in the contra fund particularly, because the contra fund, as you know, is a valuation focused fund and a valuation focused strategy. So therefore, as you rightly said, I mean the combination of the valuation excitement plus the fact that it has underperformed over the last some time, obviously caused by certain challenges that they're going through, particularly with regard to the or the transition that they're likely to go through with regard to the merger. And I think those are the kind of situations in which a fund like the Invesco India Contra Fund steps into some of these kind of companies, which are generally going through a period of headwinds, one reason or the other, and probably as a result of which the markets have punished them. So I think that is where we step in, and that is how we begin our initial allocation or begin our ownership into that name. Having said that, HDFC Bank has been in this strategy for a reasonably long period of time, so it's not a new name, but clearly this is something which now is moving into that value zone, and therefore, in our understanding and the way we have generally, operated this fund, makes for increasing allocations out here.
Okay, all right. Tahir, final question. At the start of this year, when we briefly spoke, you were talking about new age themes are starting to look interesting. Some of them have bounced off big time from those recent lows. Did you get into any of them? I mean, any view out there? Because those management started talking the right language, what the street wanted to know. And some of their numbers as well started turning around. Your take?
Yeah, precisely. This is exactly what the combination of all these 2-3 things that you mentioned. So we had some nominal presence in some of these names, and we did manage to probably consolidate some of it based on at least some of those who delivered on some of the expectations, and plus our own conditions that we have set for some of these new gen companies and which I've spoken about earlier as well, that we want to see the competitive advantages strengthen. We want to see the path to profitability becoming relatively more clear, and that typically becomes a case for us to look at them more constructively than before. There was also the more recent excitement perhaps in some of these names as a result of likely easing of or at least peaking out of interest rates and a possible easing as well, which may have in the near term been doused by some of the central banks in their more recent commentaries. But I think nonetheless, I mean, if you were to probably just disregard that for the time being, because it is very difficult to call on interest rate movements, etc. at this stage. However, some of these businesses continue to trend in the right direction, and if they are meeting up to those some of those conditions that we have set for ourselves, then I think it is helping us to probably look at them more constructively.
Tahir, we'll leave the discussion here for now. Thank you very much for joining in. We've got another market expert joining in, Vineet Sambri, the head of equities at DSP Investment Managers, joining us on the show now. Vineet, good morning, and thank you very much for joining in. Over the last 3 months, we've seen a pretty strong stealth rally. The Nifty Sensex up close to about 10%. The mid and the small cap indices are up 17-18%. What are the pockets that you are comfortable buying at current levels? Because valuations are far more expensive compared to what they were 3 months ago. And secondly, this big inflow by retail investors into small caps, is that something which is continuing even now in the month of June?
Good morning, and thank you for having me on the show. So I think you're right. There has been quite a bit of optimism as far as the overall broader market is concerned, and especially the small and mid cap space, which has seen very smart up move. But before I speak about the segments or sectors which we are sort of looking at right now, I think as we understand that as the markets keep going up, as the frenzy keeps increasing, one has to be cautious around the valuations, because that actually brings down the set of opportunities one has in terms of investing into. So I think that is point number one. Point number two is that when I generally look at within the small cap space, when I look at the last 1 month quality of companies sort of performing well, I think there is some bit of deterioration which is happening in terms of the quality. People are moving towards or diluting quality. So I think that is something which one needs to be careful about when we see such a smart up move. And to your point, I think which are the segments which are still looking okay. I think I will sort of continue with my thought process around the fact that over the next maybe 2 or 3 quarters or so, one may look at margin expansion, given the fact that across few categories which we are watching in a way, and this is on the back of moderating raw material prices and other costs. So from that perspective, I think what becomes important are some of the companies within healthcare, materials, auto ancillary. These are some pockets which are looking, let's say, reasonable, even after some bit of the momentum which is caught up. Beyond that, I would say that companies within the broader consumption basket or IT baskets are the ones which maybe over the next 1 or 2 quarters there could be likely improvement in the performance, and that's where one should start looking at those categories as well.
Vineet, hi, good morning. Thanks for joining us. You own Supreme Industries. It's one of your top holdings. Stock's done well. I mean, it started late, but I think it's caught up now, up some 30% for the year so far. Is there a sort of broader reflection on the view on the building materials space, consumer exposure as well? Just talk us through, I mean, not the stock, but, what your view is.
Yeah, I think, as far as the plastic pipes business is concerned, it actually spans across various categories, so to say, and it actually touches most parts of your economy, be it agri, be it building material, like you said. Specifically, as far as Supreme Industries is concerned, they also sort of, serve industrials and other consumer, as a category as far as their customers are concerned. So we see that after the last 2 years of underperformance, as far as the plastic pipes business is concerned, there is a normalization. The agri demand is also looking up. I think, as far as the agri income is concerned, with the rising MSPs and farmers before, if the rains are not good, they would like to sort of.
Okay, I think we lost the line there with Vineet. We'll just kind of fix that and go back to him. So I'll just wait to be told. Well, you got 50 points on the Nifty, by the way, so things are looking up. So we're at the high point of the day, so let me just put it that way. The high was made at 18,886. Okay, sorry, it was made at 18,721. And we are at the high point with this 56-odd point gain that we have on our hands. Vineet is back with us. Vineet, go on.
So what I was trying to say is that after 2 years of impact in terms of the volumes growth, I think we are looking at improved performance across various segments, be it agri, building materials also is sort of doing well overall. So I would say, and company has been sort of guiding, when one looks at their commentary or their annual report, I think they have been guiding at good growth. So I would say this is one company which we believe should do well, and which is what is sort of reflected in terms of our portfolio exposure as well.
All right. Hi, Vineet. Good morning. Vineet, what about ITC? That's been the star of the last 18 months. I think there were too many memes on it. The stock decided to perform. It's still part of your value fund. How much of value is still left? Do you think that it still has a long runaway from here on, or do you think bulk of that is already done?
See, I think again, it's all relative in a way, and as far as some of these, so to say, non-ESG businesses were concerned, I think they were sort of getting avoided at some point. But I think the company has also seen good change as far as the business across various businesses are concerned, and I think that is what is getting reflected in terms of the performance. When one compares in terms of the relative basis, I think relatively the valuations are still okay. So I don't know about how one should think about incremental investments, but I think we continue to hold on to our investment as far as this company is concerned.
What about incremental investments in its competitors like HUL or a Godrej Consumer or a Dabur or a Tata Consumer? Would you look at investing in other consumer names? Because inflation is coming down, margins have potential to improve, and plus they have underperformed ITC, at least in the last 1 month, across the board.
See, I think it makes sense to sort of start evaluating some of these consumer names, while we all know that in terms of valuations, we have not seen correction to the extent one would have expected, given the kind of growth challenges these companies were witnessing. But nonetheless, like you mentioned, I think what is going to happen is as some of the cost benefits start improving their profitability, or they start passing on the benefits of these costs to improvise their volumes, I think that should mean that these consumer-oriented companies should start seeing some sort of relative better performance is my judgment, and which is what I said in the initial remark, that over the next 1 or 2 quarters, maybe it is good to sort of keep evaluating names where the companies will benefit because of the margin expansion. So I think that is one of the core strategies which we are sort of also thinking about.
Vineet, at the end of March, the kind of mood in the broader markets was absolutely dismal. Now that's turned around quickly. In terms of flows, how has it changed? Earlier, the allocation to mid and small caps, was it lower relative to the large caps? Then it appears that allocation would have gone up. And at current reckoning, how does it work? Large cap flows to mid cap flows, or mid cap flows to large caps? I mean, how much has it moved up? And how do you think it will pan out from here on?
So, Nigel, unfortunately, what we've seen is that the investors' behavior is generally pro-cyclical, which means that whenever things are performing, in hindsight, it starts looking more incrementally more better, and hence we start seeing more flows. But I would like to sort of also put in a word of caution here that as far as investors are concerned, they should try and have a right asset allocation strategy and a discipline of reallocating whenever they see frenzy and outperformance of a specific category as such. Not that I want to discourage investments in small and mid-cap space. I'm generally bullish on this category with a long-term view. But sentiments around the investors, they don't sort of sustain with that sort of a timelines in mind. So I would say that the mood is good today. Flows are taking place more specifically in the small cap space. But I think with the next few years perspective, as the broader market or the broader economy benefits, I think these companies will also see good benefit. But as I said, I think one needs to be cautious and one needs to have a good asset allocation strategy in place.
Okay, thank you very much, Vineet, for joining in. Have a good day, a good week as well. We'll slip into a break. On the other side, Dr. Om Manchanda of Dr. Lal PathLabs will join in to talk about their business outlook going ahead. We'll also connect with V. Balasubramaniam of NSE International Exchange to discuss the transition of SGX Nifty to GIFT Nifty. Stay tuned.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement. Both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors.
Welcome back. Well, we're still holding in the green. The Nifty is up close to around 40 points, holding above that 18,700 odd mark. And good to see more number of stocks are advancing in comparison to the number of stocks that are declining. Well, let's get to the first corporate on the show, post-market opening. We have Dr. Lal PathLabs. That's a stock on our radar. For Q4, the company's growth was flat. The earnings were a little bit lower than what the street was working with. There were cost concerns in the past quarter. And in a previous interaction, the management told us that it's a little bit difficult to pull back on cost, but they were entering FY24 on a positive note. So let's find out what's the update on that front. Mr. Om Manchanda, Managing Director at Dr. Lal PathLabs, joins us on the show. Hi, sir. Good morning. Thanks so much for joining in. Well, tell us, how's Q1 shaping up? You know, there were cost pressures towards the end of last quarter, but you were saying things are looking up. Have they subsided? And also, if you could tell us, have you managed to push through any price increases?
Good morning. I probably will go back before COVID times and try and give you a perspective about industry growth over the last 3-4 years. It's a little unusual that we saw a lot of fluctuations in quarterly sales in the last 3 years. Mainly it was due to COVID. But FY24, we have entered with a stable sort of base. Now, COVID is virtually about 2 to 3% of contribution at industry level. If you study the industry growth rate for last 3 years CAGR for the numbers which are in public domain, it's about 11.5%, including COVID. If you remove COVID, it's about 10%. So my sense is going forward, it will be a steady growth what industry has experienced in the last 3 years.
Mr. Manjanta, good morning. You told us that you had taken a price increase. You took a price increase in February, right?
Yes, that's correct.
Have you taken one since? I mean, over the last month and a half or so?
No. Price increases are not that frequent in this industry. We had taken this only in a partial portfolio, and it was mainly on high-end test. But we don't take price increases so frequently.
Right. No, because you told us that the ability to pricing pressures are abating a little bit is what you told us when we spoke with you in May, and you said the ability for price increases perhaps is getting a little better. The outlook is getting better, not necessarily that you would take one. Does that still hold true?
Yeah, I think the last 3-4 years, one had seen new entrants coming in, and many of them actually were trying to gain shares by undercutting and very, very sort of heavy discounting and promotions. And I think overall the sense is that that sort of a competitive intensity has settled down a bit now. I think whatever numbers we are seeing in this intensity is slightly baked in this current pattern. And most of these were actually in about 3 or 4 cities, but a large part of the growth is now going to come from tier 2, tier 3 towns. I think one can on balance say that intensity is I would say stable, not really that much as one used to feel earlier.
Have any of the new age diagnostic companies undertaken a price increase? You had in February. Since then, you don't plan to. But what about competitors? Are we seeing them going ahead with some price hikes, particularly these new age companies?
Pricing in this industry is not really national. It's more varies city to city and region to region. But the feedback that I'm getting from my teams is that the kind of discounting which was happening earlier is much less. So effectively, there is an increase in prices. That's what I would say.
Okay. So how is your Mumbai reference lab doing? It was opened in January of 2023. Could you give us an indication of the kind of utilization or the revenue potential from Mumbai and how it's scaling up?
Yes, this reference lab is a part of our overall strategic plan to aggressively enter in West market, and that's precisely the reason why we did our acquisition of Suburban Diagnostics. And we are now entering into phase 2 of integration, where we will try and actually operationally see if Dr. Lal Path Lab samples can also be tested in this lab. So we are trying to look at consolidation of testing in Western region for both the companies together. Going forward, we will definitely see higher throughput in this lab. And this is very strategically placed because Suburban Diagnostics was mostly known as a routine kind of testing lab, but with high-end coming in, we now offer the entire test menu to the market.
When do you think you will be able to create a dent and garner considerable market share in West India?
Yes, we are very confident because first of all, this process is very gradual in nature. So healthcare, you don't see really spikes in growth rates. So I would say over a period of next 3 to 5 years, we are very, very confident that we'll be able to increase our shares in Western markets.
Okay, just a quick point, Mr. Manjanta. Swasth Fit, which you basically told us is about, I think, a little over 20% of your revenues.
Yeah, that's right.
How is that doing now? How are consumers taking to it? What's the scope of the package?
Yeah, it continues to perform well, and I actually would say that overall, if 3 or 4 broad trends that we see in the market post COVID, I think number one, I would say the bundling actually has become very popular in the industry. A lot of customers and patients who actually were either chronic patients or they're looking for preventive health checkups So I think this bundling or health packages has become a way of life. While SwasthFit has contributed handsomely for us in the last 2 years, it continues to perform better. I would say it's an industry-wide phenomenon where the bundling has become a way of life.
Okay.
All right, Mr. Manjana, thank you very much for your time. Good speaking with you. Appreciate you joining in with that perspective. That's the diagnostic space. Well, the market's up 50 points. 18,715 is where we are at. Now, every morning we refer to the SGX Nifty all the way till about 9 o'clock till the pre-open kicks off. Well, guess what? Starting next Monday, which is the 3rd of July, we will not be saying SGX Nifty is up this much or that much, or down this much or that much. We will be referring to it as Gift Nifty. This is a full-scale transition which is happening from the 3rd of July. That is the coming Monday. The contract will be trading for, I think, 21 hours. And the sort of product will start trading from the NSE International Exchange at Gift City. Let's talk about this and get you up to speed with what this means, and as investors, does this, or traders, what you need to be aware of. V. Balasubramaniam is Managing Director and Chief Executive Officer at NSE International Exchange. He's joining us right now to take some questions. Thank you very much, sir. Good morning. Great to have you with us here. Prashant this side. Could you, so this is, I'm assuming it's all, the setup is all ready, right? Starting next Monday, Gift Nifty will start trading. Could you talk to us about what is the clientele for this? Will, offshore clients, overseas clients who were all trading SGX Nifty, they start executing trades, or the order matching starts happening at Gift City here? Or are you expecting many more clients, the Indian broking community, etc., to also participate? Go on, sir.
Yeah, thank you, Prashant. So this is going to be a mix of both. So as you rightly introduced, so next week, 3rd July morning, 6:30 a.m. India time, the Gift Nifty will completely switch from Singapore to the Gift City at the NSE International Exchange. So we're going to call this contract as the Gift Nifty. And we are looking at basically a connect arrangement with Singapore. It's a win-win partnership where basically Singapore Exchange has created a special purpose vehicle company called the SGX ICI, which is a trading member and a clearing member firm set up in the Gift City and a member of the NSE International Exchange. So effectively what will happen is all the clients who are trading on the SGX today will actually now be routing the orders through the SGX ICI, the SPV company, and effectively all the matching will move over to the NSE International Exchange. Additionally, as you rightly pointed out, we also have direct members here. So we have close to about 62 odd members who are right now connected to us, who are mostly the subsidiary companies of Indian broking firms. And these are also set up to trade. So effectively, we are going to see a single liquidity pool, less defrequented market. So in fact, all the offshore trading on Nifty will now move over to the Gift Nifty from 3rd July.
All right. Good morning, sir. Nigel on this side. Well, and I understand that currently the SGX Nifty functions for around 16 hours. Now, post, Gift Nifty coming, it will be 22 hours. So, high number of hours as well. Give us a few more details. The SGX Nifty, what is the current open interest? I think it's around 10 billion USD. If you could correct me on that number. I'm looking at the current NSE, the Nifty futures, the total value is around 2 billion. So this will be a big shift. Tell us more about that.
Yeah, so basically as you speak, today the Nifty, the SGX Nifty open interest is roughly close to about $7 billion. So it has come down a bit from 10 billion, which was the peak number, but still nevertheless, it's a very large number. And as you rightly pointed out, it is much larger than what we have in the domestic market in terms of open interest. In terms of the volumes, on an everyday basis, roughly about $1.5 to $2 billion is transacted on the Singapore. So we expect the whole thing to kind of move over here. And the trading timings are more or less going to be the same. So we're going to have two sessions, one from morning 6:30, which will go on till afternoon 3:40, which is when the Indian markets end. And after that, we'll have a post-close session. So effectively, there is one session in the morning, and then there is a second session which starts at around 5 o'clock and keeps on going till morning around 2:30, 2:45.
Right, sir. So the entire 7 billion open interest will shift to Gift Nifty, right?
That's it.
Okay, and also just give us one more detail. Currently, what is the revenue sharing between NSE and SGX Nifty, if at all? And, post this shift, how do things work? There'll be higher cost as well for the National Stock Exchange. So, how do they outweigh each other?
So broadly, there has been something called a collaboration agreement, which has been worked out in 2020. Of course, this is a very confidential agreement between us and Singapore. But broadly, the way it happens is there are two sides to the volume. One side, Singapore brings it through its SPV, and the other side is something which NSE brings directly through its member in the GIFT City. So effectively, the revenue sharing on the Singapore side will be 75-25 in their favor. And whatever we bring directly onto us will be again shared with 75-25 in our favor. So effectively, it's two different kind of basically ratios in which the revenue is going to be split. And this is going to be exchanged at the end of the month. That is basically how it happens. And in terms of tariff rate, it's the same rate for both sides of the members. So for there are again two tariff rates here. One is for proprietary traders and one is for client traders. So if a client actually trades and executes each contract of Nifty, which is basically $2 into, say, if the Nifty value is $18,000, so $36,000 becomes one contract. So on that, $1 is the trade, is the revenue or the exchange transaction fees, which is on the client trade. And on the proprietary trade, it is 40 cents. So that is something which is going to be common on both sides.
Sir, besides SGX Nifty or GIFT Nifty, as it will be called, are there any other contracts that you are planning to launch?
So the GIFT Nifty as a series has actually 4 contracts which has been put into the SGX Connect arrangement. One is obviously the Nifty 50, the main benchmark index. Then we have the Bank Nifty, and we have the IT Nifty and the Fin Nifty. All these 4 contracts are currently part of the Nifty series, which will be part of this Connect arrangement.
Any others beyond these that you have in the pipeline?
So at this point of time, this is how the agreement is kind of structured. And going forward, we could probably explore how the partnership can be expanded. If everything works out well, then we may probably look at more partnership with Singapore Exchange. And obviously, we are also looking at multiple partnerships from the GIFT City, also with other international partners in other parts of the world also.
Just a few questions, sir. That 75-25 that you, the revenue partnership that you alluded to in favor of Singapore for existing volumes, what was that earlier?
So earlier there used to be a licensing agreement which NSE used to get directly from Singapore, which is part of the NSE indices. So that is something which will probably stop, and going forward, NSE International Exchange will be sharing some part of its revenue with NSE indices as well as with our clearing corporation, the NSE International Exchange Clearing Corporation.
Got it. And the additional sort of whatever you get, which you said you referred to those 62 brokers, right, who are directly registered here as well. So there, the revenue share will be in your favor.
That's right.
As you said. Got it.
That's right. We expect to grow this pie much more going forward. And the term of this agreement is about 5 years with the renewable clause of another.
Got it. For a viewer who is watching right now, a retail viewer, a question which I'm sure will pop up is, after markets close here, will this, as you said, it'll start trading again 5 p.m. onwards. Can a normal, regular sort of Nifty futures traders trade GIFT Nifty?
So
what will he or she have to do? Go on.
So basically, the IFSC is a jurisdiction which has been set up within India, but it is a non-FEMA jurisdiction. It is outside, non-resident under the FEMA. But effectively, Indian broking firms can actually set up a subsidiary firm for their proprietary activity. But as far as customers are concerned, I think under the LRS framework, they cannot trade on derivatives. They can only trade on tradable products. So in fact, NSE International Exchange has also created tradable, basically investment products also.
Got it. So the answer is no, right? They cannot. Got it.
Yes,
Just one more question. India is 95% options as a share of volumes, right? I mean, Singapore is, I think, 95% futures. Will you be, is there any way you can sort of generate sort of generate interest in the option side as well with this initiative? Yeah.
Yeah, definitely. We have both the futures and the options. And additionally, we also have the weekly options contracts here, which today Singapore doesn't offer. So obviously, the Indian side, more and more volumes will be on the options because I think it is more efficient from a volatility kind of perspective. But again, it's all up to the market. As in market infrastructure institution, we are absolutely agnostic. We offer both the futures and options products.
Got it. Sir, we'll look forward to, GIFT Nifty starting the 3rd of July. And, we'll look forward to speaking with you again on that day when the contract is launched. Both you and Ashish Kumar Chauhan, I think, will be there at the location to kick this off. So more then. Thank you very much for joining us and giving us a detailed perspective on what the product is all about and what this will mean for NSE as well. Well, I think Mitesh is with us with a quick view on what the market is doing. The market went up 55, 60 points and has completely climbed down to being up just about 3 points, absolutely flat. Mitesh, what would you do now?
Morning, Prashant. I think, as I said, I think on the index, you will be very sluggish, and till we get past that gap which happened on Friday, which is 18,760, I don't think even we are looking at any kind of upward traction. So a break below 18,650 would, of course, 640, 650 would, of course, trigger another 100, 150 point kind of selling. So that's the trade which possibly can evolve on the Nifty. But till then, I think, just sit tight. On the stock side, National Aluminum is a sell with a stop at about levels of 82.5 and look for targets of around 76 over here. While what I like is on the buy side is IndusInd Bank, which could possibly see some upsides. That's a buy with a stop at about 12.96 for targets of 13.60.
Okay, thank you very much for joining in. We will slip into a break. When we return, we will get chatting about commodities. Manisha Gupta will join in next.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7. And in this year, over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also.
Welcome back. Let's shift our attention now to the commodity markets. Manisha joins us in the studio. Manisha, what are you tracking?
Well, I'm looking at the crude oil prices because remember, the weekend was all about what's happening in Russia, and that has impacted the crude oil prices also. So we've started on a positive note here. The brief rebellion that we saw in Russian military there has led to prices gaining. We did see $75 a barrel as a knee-jerk reaction as soon as the Asian markets opened today in the morning. But as you can see, 74 is back. Even then, we're trading 0.25% on the higher side there. Well, Russia is important because Asian markets are buying Russian crude at a big discounted prices. India, especially in last 3 or 4 months, has been importing record Russian oil. So any sentiment disruption there is what is impacting the crude oil prices also. Last week was a weak one. We saw 4% of decline come in for the crude oil prices. We did see prices trade at a 3-week lows as well. And it has been nearly 5.5% of a decline for the crude prices in the month of June so far here. What the street is also looking at is the further monetary policy hikes that we saw come in from various central banks, including US, Norway, Switzerland, Canada, Reserve Bank of Australia, and the PMI numbers from many of these countries have been actually on the weaker side. So whether it's about manufacturing or services numbers, all of that have come in weaker for the month of May and much part of the June there as well. The global markets will continue to watch though for the kind of output cuts that we are seeing from OPEC and allies. 4.16 million barrels per day from OPEC and allies, within which the Saudi Arabia cut is at nearly 2.5 million. So Saudi is another market to keep an eye on. I also want to take you through on what the forecasts really have been going forward for the rest of 2023 coming in from the various banks and brokerages. So that there you have it. The most bullish one really comes in from Barclays, but this is from the month of March, April, May, June, and I'm sure they would be revising it downwards as well. Goldman Sachs recently came out with a report. 86 is their latest one. Morgan Stanley is talking about $85 a barrel. But apart from that, all other major banks are talking about $80 to $82 a barrel going forward. That includes JP Morgan, Citi, and Bank of America, which believe that 80 to 82 is what you could be looking at from this quarter to the fourth quarter as an average now for the Brent prices.
Manisha, thank you very much for that. For the markets, by the way, there has been a sudden dip. The high today was 18,722. From that level, the Nifty's lost close to about 60 points, and it's courtesy names like TCS. TCS is now the top Nifty loser, a fall of more than 1%. Reliance Industries is under pressure. L&T is moved to the day's low. But one stock which is standing pretty tall today is Tata Consumer. Top Nifty gainer, 2% up on that. Mangalam joins in. Mangalam?
Well, the reason why Tata Consumer is higher in today's trading session, along with all the consumer stocks and a little more for Tata Consumer, is largely because of a Citi note. They've initiated coverage. They have a buy recommendation with a target a little over 1,000 rupees, 1,020 odd. And they valued the company at 56 times FY25 earnings, which is a 5% premium to its last 3-year average. Why do you think Citi would have given it a 5% premium? Well, because one, the company is strengthening its position in the core categories. Alongside that, they are expanding the growth categories as well. And the key driver for their growth categories would be one, formalization of their category, them gaining market share from local players. Secondly, the new products that the company has been launching and expanding distribution. So all these factors would lead to higher growth for them, and as a result of which growth businesses, which accounted for nearly 15% of their overall revenue in FY23, is likely to be 27% of their revenue in FY26. The company in its stated guidance has given a 20% target for FY24 itself. So basis this, Citi has a recommendation or expectation with regards to their revenue, EBITDA and profitability growth. They targets 12% compounding of revenues, 17% compounding of EBITDA and 22% compounding of net profit over the next 3 years, and as a result of which they have the buy rating. But do be mindful of the risks. The biggest one is delay in demand recovery due to El Nino conditions, volatility in commodity costs, something we'll be watching out for, and further intensity in competition.
All right, Mangalam, thanks very much. Our consumer in focus there, Citi initiating coverage. Well, we'll take a quick commercial break here. On the other side, it's our specialist, the economy. Lata will connect with Anurag Jain, Secretary, Road Transport and Highways, to decode the infra road build-out plan for FY24. Stay tuned, that special conversation comes up next.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement. Both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14 to till date, 13-14, I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this.
Welcome to It's the Economy. For the past 2 years, the Indian economy has been boosted by capex spending by the central government. In the FY23-24 budget, the government has budgeted to spend 3.3% of the GDP, or over 10 trillion rupees on capex. The road ministry is an important part of this thrust, with a budgeted expenditure of 2.7 trillion rupees, of which capex support to the NHAI is 1.6 trillion. Now, how much has been spent so far, and what are the plans for the second quarter? To get a handle on this, we have with us Anurag Jain, Road Transport Secretary, or rather the Secretary to the Ministry of Road Transport and Highways. Mr. Jain, thank you very much for joining us. Well, first up, sir, what is the total kilometers of roads that you are targeting to bid out this year?
It is about 12,500 crore, and my initial reviews show me that we can actually do a lot better, because Honorable Minister desired that can we reach 40 kilometers per day in this year, and I guess we'll come very close to it.
Okay, no, that looks like the amount of roads you are expecting to construct, 12,500. But how much of new roads do you expect to award this year?
We are actually working on a very big vision map, and Honorable Prime Minister gave us Vision 2047. So
Yes.
keeping that in mind, we are working on a very, very planned and methodical way of taking up new projects, which will actually entail higher logistic efficiencies in the country so that no part of the country is left out. And once that program gets approved, our pace of award will become much faster. As far as particular this year is concerned, we should be again able to award something close to 13 to 14,000 kilometers, because most of the sanctions which took place last year, they'll get into the award phase this year. And based on this new program, what we'll sanction this year will actually get into award towards the latter half of this year or early next year. That is how the cycle works.
Oh, okay. I'll time permitting, come back to this. Let me take the expenditure. How much does the ministry expect to spend this year in terms of capex by the government on roads?
Our total budget is, as you just mentioned in the beginning, is 2,70,000 crore. And on top of that, actual capex will go up to 325, the way you assess, there's a private contribution, etc. 3,13,000 crore. So we'll definitely complete it. And as the mood is, the buoyancy in the system is, probably at the stage of RE, we may be asking for more. But definitely we'll definitely achieve as the plans go now. By December, we'll be trying to cross 80% target for sure.
Okay. Now, can you tell us how much was spent already in the first quarter, which is going to end by the end of this week?
In the first quarter, our target was 102,000 crore. Against that, last week when we reviewed, we had already crossed 96,000 crore. So we are going as per the target. And as per the target, we'll be crossing 80% by December itself.
Okay, so staying on target now. Now, the data we have shows that HAM, that is a hybrid annuity, is the preferred mode. Will we see other modes of awarding projects, say, will BOT or EPC become more popular?
It depends, like it's a dynamic way of deciding, but as per the plan, if you take up the NHA projects, which are relatively the bigger projects, which are more amenable to this kind of works, they are in the new cases, which will take up about 80% of the cases will be under HAM, or some of them, if the environment permits, there will be BOT. In some cases, probably we'll go in for creating an SPV, like a project financing, what was done for the Delhi-Mumbai Expressway, and certain other cases will be EPC. But definitely, we are moving more towards attracting the private capital through HAM. And what is more important, it actually lays emphasis on the quality. In HAM, since the operator has to maintain the road for 15 years. So in our assessment, right now, I'm pretty new to the department. In my first interactions and the first few visits to the projects on site, I personally have a feeling that probably that puts a skin of the contractor into the game, and therefore quality is maybe marginally better. Or maybe we need to tweak our EPC model also to make it a defect liability period or the maintenance period also longer, so that the quality also improves for all the projects.
Okay. Okay. All right. So HAM is preferred for that reason. What are the major trunk routes that you expect are going to be completed this year? I mean, the marquee routes.
This year, as we visualize, more than about 350 projects will either get inaugurated or will get the foundation stone, about 175 to 180 of each of them. So, say for example, you talked about this, I take a project, Ambala Kotputli, which has been recently completed. So now from Ambala to Kotputli, you can reach within 2 to 3 hours. What it has done, it has really added a huge logistic efficiency. Jammu to Srinagar, instead of 15 hours, a truck can reach between 8 to 9 hours. That is a present situation. By August 25, when the Jammu to Srinagar highway gets completely done, all the other tunnels get completed, the truck would reach in 6 hours. So Delhi-Mumbai Expressway, in the Delhi-Mumbai Expressway, Honorable Prime Minister has already inaugurated one part up to Lalsot, and two more patches, two more parts will get inaugurated very soon. And by about December 24, probably you can drive. There will be a very small tunnel which will be remaining. You can drive from Delhi to Mumbai in about 12 hours instead of 24 hours. So a lot of big projects will get completed, and they're just getting into the completion phase now.
Okay. Okay, got that. Now, the NHAI, let me come to that. It is still holding on to a huge debt of over 3.4 lakh crore rupees. How much of this are you expecting to bring down this year?
By 2032, the major part of the debt will be cleared. There has been a conscious decision at the level of Finance Ministry. If you look at it, even though NHAI is rated as AAA+,
yes,
so cost of funding is reasonably decent. Yet, it can't match the cost of funding what the government gets. So therefore, what has happened is, whole of the financing is coming through the budget, and whole of the toll revenue is getting into the Consolidated Fund of India. What was happening? It is you are taking loan against the toll which you will get. So toll goes into the CFI and you get it from the budget. So there's no dearth of fund. Whatever you otherwise would raise, you will still get it. So now we are into that repayment phase. Every year, whatever is due will be paid. And as the projections show, the major part will get over by 2032. And only one more mode we have brought in, like we have brought a lot of financial innovations. The toll revenue is really increasing at a fast pace. If you see, if I have to compare the last about 9 or 10 years, in 2013-14, the toll revenue used to be around 4,000 crore. It has already reached about 41,000 crore. And we expect that it will reach about, in next 5 years, it will increase to about 1.25 lakh crore. That is because we are building good roads, we are getting toll. So again, you can redeploy, you can reinvest that fund. So for the purpose of investment, we have come out with innovative instruments like TOT or InvIT. So we are getting some upfront money there also. So all that financial planning is in place, and we are working to get our Vision 2047 up and achieved as quickly as possible.
Okay. What is the NHAI's InvIT target this year?
Yes, every year in consultation with Finance Ministry, we have a target to sort of monetize our assets. So this year we are trying with all the three modes, we are trying to monetize about 45,000 crore. Official target is 35,000 crore. So internally we take a larger target so that we don't falter on the target.
Okay. Now, what is the extent of private sector participation? Is it enthusiastic? We get the impression that government capex is good, but private capex is not yet up there.
I think there's a very positive story going around in the highway sector, especially after COVID. The kind of decisions which were taken, they have really gone and made the industry very, very competitive. The kind of decisions which we did our department, the size of the projects was rationalized, the eligibility criteria was rationalized, then the payment conditions, like typically we would make payment over a project cycle in 5 tranches. That has been made 10 times. So that has improved the liquidity of the contractors. Plus, there were a lot of capacity building workshops and handholding. So as a result, the contractor system started growing up. So in the just matter of last 2.5 to 3 years, since all this started after COVID, so I would say the country really used this as an opportunity. The number of contractors in our ecosystem has increased by 60%.
Oh, okay.
So that has really brought in intense competition.
Okay. That's good to hear, 60% rise in the number of route contractors. Are there any serious land acquisition worries that can delay the projects? This has been the proverbial bugbear.
No, land acquisition still remains a challenge. Forest clearances still remain a challenge, even though a lot of good work has been done by the Ministry of Environment and Forest. They have brought in Parivesh to expedite processes, etc. They have set timelines. Still, but on the actual field, because the project, it has to go through various hands, still it takes reasonable time. And on the land acquisition, I would say, if there is a problem, it really runs into. So this is the most major challenge. Of course, a lot of good work has been done on the utility shifting. So these are the three major challenges, and that is why when people talk about the delays in the project. So now what we are targeting is that all that is being, we are attempting that will actually give the appointed date for a project only after 90% of the land is available in EPC mode or 80% in the HAM mode. So once that happens, so substantial piece of land is available. So even if you have awarded, the appointed date may come later. Thereafter, the pace of execution is much faster.
Okay, got that. So you wait for 80-90% of land acquisition before the actual appointed date. Got that. Now, the big worry in industry is, in India Inc. is that in an election year, the government will sacrifice capex and do revenue expenditure, you know, like Jal Shakti or income transfers. Do you fear this time the road ministry will fall short of spending your entire 2.7 trillion budget?
I personally don't have, because my colleagues in finance ministry, I worked with most of them, and Honorable Prime Minister is so focused on infrastructure that this actual, when I was in my previous department as Secretary DPIT, I had made a presentation to the Council of Ministers, what are the projects which would get completed in 23-24 of across all departments. And there is a monitoring mechanism. Every minister has been tasked with this, monitoring it closely. Every secretary has been tasked with this. A special portal has been created within the DPIT, the Pragati system that was made. So as a result, there is a very focused attention on completion of these projects and the capex. Honorable Prime Minister actually himself reviewed in the first half of June every infrastructure department, and one of the key questions was what has been the pace of expenditure and how do we propose to cross 80% by December. So by and large, every infrastructure ministry is doing very well on that count. As I mentioned about my target, in the first quarter itself, we'll end up spending more than 35%.
Oh, that's very good, 35%. You're at the moment standing at 1 lakh crore. How much has FASTag increased your finances, sir?
It has really improved. The FASTag has been transformational on various counts. Number one, the leakages in the system have gone.
Yes.
Number two, it has made life easy for the people. The stoppage time on the toll has gone down. Yes. The fights have gone down. So as of now, if we look at it, the total collection, 98% of the total collection is on the FASTag. That speaks for itself. 100% of our tolls have been digitized. They are on the FASTag system. Only about 2% of the people, for some reason, where the FASTag is not working, or for some reason they don't have a FASTag put on their vehicle, there's a very minuscule. And what it has brought in as a tangential advantage, there was a study, so it is not a full-fledged data based on a sample study.
Yes.
The average time taken at the toll before the FASTag system really became ubiquitous was about 734 seconds. That's more than 12 minutes.
Okay.
Now it has come down to 47 seconds.
Okay.
That is the average. So let me not give such a rosy picture. There would be certain tolls where it is more than that. So we have gone into the deeper analysis. Okay. We are trying to set up a system where if there's a delay more than a certain amount of time, then we take up those tolls for further modifications, how to improve the geometry, the number of lanes or system, whatever has to be done, so that the life becomes easy for the people who are passing. So it has been really transformational story.
Oh yes, that is transformational. Mr. Jain, we're out of time. Thank you very much indeed for joining us. I think the big takeaway from me is that stoppages at toll nakas has fallen from 12 minutes to a little less than a minute. Yes, that's an average, but that's encouraging. We wrap up on Bazaar on that note. Chartbusters up next.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our metro, we'll be able to reduce 10, or we'll be able to save 10 lives. Once these two metro lines start fully functional, there will be huge relief. Once all these 8 to 10 lines are completed, which are going on right now, we will be creating a carrying capacity in Mumbai more than 1 crore passenger every day, plus suburban trains 40 lakhs. So I think there will be no congestion in future in Mumbai. Second thing, every time we face that, we see whenever there is an unprecedented rain in Mumbai, all the locals come to the standstill. Fortunately, the metros, majority of the metros, 70% metros are elevated, only 30% metro part is underground. So even during the flood, severe flood, the Mumbai will not come to standstill.
Today, Mumbai Metro 2A and Mumbai Metro 7 have partially decongested the notoriously jam-packed Western Expressway, have helped ease traffic on SV Road and Link Road, and have helped provide seamless east-west and north-south connectivity to the western suburbs, catering to almost 60% of the population. But even as the metro network expands, those at the
ICICI Securities surges on the news that the board will consider delisting in their meeting on the June 29th.
Steep fall for Shree Cement continues. The stock price has been on the downward spiral since the IT department's survey for alleged tax evasion started late last week.
Landmark Cars continues its rally for the second day after a big block deal on Friday. 3P India Equity Fund, Abacus Asset Manager, Unify Capital, Society Generale, among others, emerged as buyers in the block trade.
Ipca Laboratories drags after the American drug regulator body FDA issues Form 483 for the company's Pithampur formulations facility, issues 8 observations following inspection at the facility from June 15th to June 23rd. Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangalam Malu. Well, Mangalam, it's a flattish start. The Nifty tried to make a bit of a run at the start of the session today. But from the top, we've come off a little bit. The Bank Nifty as well, that was doing a relative outperformance. That's pulled back quite a bit.
Let's pull back quite a bit, Nigel. It'll be interesting to see where we go from here because, despite a bit of a dip from the top, Nifty is managing to hold on to that 20-day moving average. So let's see where that goes. The Nifty Bank to holding on to the 50-day moving average of closer to around 43,500 odd mark. Let's welcome Shivangi Sarda for a quick technical check on the market. Shivangi, it is June series expiry. Where do you think we go from here?
Good morning, Mangalam and Nigel. Thank you for having me on the show. So we've seen that, Nifty, despite, little hiccups, it is supporting the, lower levels, and we can see buying at lower levels intact. So there is, support-based buying, which is keeping the market afloat along with the sectoral, buying, which will drive the market to higher zones. But then again, the upside is also little capped because the writers on both the sides are standing very strongly. So we could see, intraday support of 18,650 levels, but then major support is at, 18,500 zones. So watch out for these levels for as a support zones for an upside towards 18,777. Then lifetime high levels. Now, talking about Bank Nifty, we've seen that this index has been underperforming from the entire series. And as we move ahead into the monthly series, we can see that clearly there is an outperformance in Nifty. So Bank Nifty also has its support levels at 43,000 intact, but the upside is somewhere a little more capped at around 43,800 levels. So watch out for these levels in Bank Nifty, and Nifty one can apply buy on dip strategy for the coming week.
All right, Shivangi, what about individual stocks? What are you looking at?
Individual stocks on my radar first is from the pharma space. We've seen quite a lot of attraction in this sector and buying interest over here. I'm talking about Lupin today. This stock on week-on-week basis, it has continuously performed from the month of March. And we've seen that any small declines have been utilized for the buying. And this stock is moving in an upward sloping channel. And, it's a very narrow range formation on the daily frame, and it has come out of its range. So the stock is looking quite positive for a good upside for 900 levels with a stop near 850 zones. Second pick on my radar is M&M. We've seen that this stock has been continuously moving higher, and on weekly we've seen that a little bit of a pause in the last week has given another good risk reward ratio over here to add up at these levels. So this stock is definitely looking quite positive, and it will get a tailwind from the entire sector as well. So recommending a buy here with a target near 1450 zones and a stop near 1360 levels.
All right, Shivangi, thanks a lot for joining in and giving us those calls on the index as well as individual stocks. Before we move on to the next, thing that we're talking on the show, just keep an eye on a couple of stocks which are doing extremely well. Parag Milk, up around 8%, has had a decent month, up around 30% plus over the last few days itself, and that's largely because of fund buying coming in from 6 cents. We're seeing a decent pullback on Mazgaon dock ship as well, up around 7%. And just keep an eye out on Gillette. Gillette was a top gainer on Friday. We had a 5% jump coming in on the back of a Nirmal Bang note, and now it continues to move higher, up around 3.5–4%. So that's the maximum that the stock has gained in the last couple of trading sessions, because it's been down 25% over the last 5 years or so. But let's talk about some more ideas for profit coming in from our colleagues at Money Control Pro. Bharat Jinani joins in today.
Today's ideas would be PNC Infratech Limited. Infrastructure development is expected to remain a key focus area of the government, given the upcoming elections in key states as well as general elections early next fiscal. The company has guided for a strong order inflow of 10,000 to 12,000 crore rupees in the current fiscal. It has guided for a revenue growth of 15% in the current fiscal. If we talk about order book, it is rupees 15,600 crore rupees, which is about 2.2 times FY23 revenues, providing a healthy growth visibility in the medium term. About 2/3 of the order book is from the road segment, and 1/3 of the order book is from the water and irrigation segment. The company has been recently winning several railway and metro projects, which would lead to further diversification of the order book going ahead, which would be positive. The company is in talks to monetize 12 road projects, which would free funds worth rupees 8,600 crore rupees. The company has shortlisted 4 bidders and expects the deal to be concluded by the end of this fiscal. PNC Infratech is amongst the quality infrastructure stocks known for smooth project execution as well as financial prudence. If we talk about the valuations, the stock is currently trading at 9 times FY25 projected earnings. Investors can add the stock in the portfolio.
All right, with that, we'll step into our short break on the show, the first one. On the other side, we'll be joined by Gurdeep Soni, who's Chairman and Managing Director of Uniparts India, to discuss the company's FY24 outlook.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Pralad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so. And as you have already seen, from 13-14 to till date, 13-14, I think it was 572 million ton of the production. Today we have almost reached nearly about 850 million tons. and this year we are crossing 1 billion. This is the first time, and this is the last year, it means the year which passed away just now. In that year, our total production was around nearly about 800.
Welcome back. Absolutely flat for the frontline indices. The mid-caps doing well. Let's welcome the first corporate on our show. We have the management of Uniparts India, the engineering and system solutions company, plans to expand its customer base globally and focusing on diversifying into adjacent markets as well. Gurdeep Soni, who's the chairman and managing director, now joins us to discuss the business in detail. Thanks a lot, Mr. Soni, for joining in. I remember, post your IPO, the first numbers, you joined us and you said that 15 to 16% is the revenue growth that you're targeting for FY24, with margins between 21 to 22%. A lot may have changed since then with regards to the underlying. There has been a bit of a slowdown in Europe as well. A quarter of your business comes in from there. Would you hold on to that guidance or would you revise it lower?
Good morning and thank you for having me on the show. For the current financial year, because there is a softening in the small tractor business globally in USA and Europe, also the aftermarket business is showing softness primarily in the first Q1 and some in Q2. So we are forecasting a full year growth of a high single digit for the current year. But as soon as the inventory levels are corrected, we see moving to the 15 to 16% growth from next year onwards. We are, in fact, also delivered a fantastic results last year. And our EBITDA this year also is expected to be between 21 to 22%.
Okay, all right. Hi, Mr. Soni. Good morning. Thanks so much for joining in. So some bit of headwinds, it appears, for FY24, and that's why you're scaling back from mid-teens to high single digits. Got that. Give us a few more details. On your working capital days, it seems you've worked out there, because in the last year, it's come down by close to around 18 days to around 144 days. Do you expect this to improve even from year on? Give us what should be the targeted number out there. And also, if you could give us a quick idea about your dividend plans. Last year as well, you paid out hefty dividend, quite a large part of your EPS. Do you look at continuing the same?
So let me start with the dividend. We actually had a 25% dividend policy, but with the last dividend of 6 rupees, the second interim one, we have actually paid a total of 31%. We do see very high cash flows coming into the company. In fact, last year, the net cash flow was 252 crores, whereas the dividend has only absorbed 63 crores. We have, in fact, become cash positive. On 31st March, we were 46 crores cash positive, despite the dividend outflows. Coming back to the number of working days, yes, we dropped them, and that was primarily because of the improvement in the inventory. What was happening was that it was taking 90 to 95 days for inventory to reach USA and Europe. That has dropped from 55 to 60 days, and therefore the number of days of inventory that was held up on sea has dropped dramatically, and that has helped us to improve our number of working days down to 144. We are still looking at this number improving in about 138 to 140 days for the current financial.
And what about, I got the 130 to 140, but dividend payout, you'll continue to pay more than 25% of your EPS?
Definitely looks like that, because the cash approvals are really very strong.
Got it. Right. And you obviously don't spend more than 3% of your revenues on CapEx every year, any which way, as you've spoken of in the past as well. But let's talk about the adjacent products. I mean, you've developed a 3-point linkage system for UTV. I'm trying to understand the opportunity that comes in for you here, because the market opportunity, as pointed out by you, is close to 200 million USD. How much of that will be captured by you, and how much of that will be captured in the first year? How does that glide path look?
So you're correct. This is a market size of close to $200 million, which we expect in the next 3 to 4 years to be able to do about 200 crores of sales in this particular business, out of which we should capture about close to 20 crores in the current financial year, because the launch of this new 3PL system is being done sometime in November this year.
Mr. Soni, you're saying that your cash in your books is good. You're going to be generating good cash flows as well. So investors will be quite excited that you could continue paying dividend. But given that you have good cash and you're going to be generating cash flows, there's some inorganic growth plans on your mind? If yes, could you tell us what could be the potential asset size? And will you announce something in this year itself?
So we are looking at 3 or 4 opportunities. It's too early for me to say which particular ones, but in the vicinity of 100 million to 150 million top line company, most likely in USA, but we are also looking in Europe. I cannot put a timeline to this because you know how these things are, but we are definitely looking at that. And you're right, with our very positive cash flows, we feel that most of that acquisition can be funded from in-house accruals.
What's the kind of acquisitions that you're looking? You gave us a rough size. Is it going to be in the sectors that you already operate in? Is it going to be adjacent sectors? Will they be profit accretive? I'm just trying to understand the spaces that you're looking at.
So we had said that while we are in the 3-point linkage, the 3PL and the construction machinery parts, PMP, but we are also looking at adjacent areas like power takeoff or PTO, construction and hydraulics. And the new acquisition that we are looking for is in the additional new businesses, which is of PTO and hydraulics.
All right. Mr. Soni, you're saying that the acquisition target could have 100-150 million of revenues.
Correct.
What could that cost you approximately for your company? If I look at sales, since you've given the sales number, you're trading at close to around 2 times your past sales. So if the acquisition is for around 100 million odd, will the acquisition target be around 200 million?
Let me give you some more figures on that. So if it's 100 million top line, normally a US company is working at about 8 to 9% EBITDA level. So, and you normally can acquire a company for between 5 to 6 multiple, so that arrives at, a total cost of about 40 billion. And if you could, fund half cash and half debt, so you're looking at financing about 20 million from in-house.
So potential target will be a $40 million acquisition, right? The potential outflow, and then you'll have to see how to split it up. Correct. Yeah.
No, just reverse calculating math. He said that the companies that he acquires, 8 to 9% EBITDA margin would give it around $8 to $9 million in terms of EBITDA. Multiply that by 5 to 6 times, gives you a rough number of what we're looking at in terms of the size. But you yourself operate at 21 to 22% margins. Acquiring companies which does 8 to 10% margins would be margin dilutive for you, right?
Initially, it would be, but we target companies where we can bring in at least 30-35% of the business into India. We already have one company in the US, which when we acquired was at about 7 to 8% EBITDA. It is now moved down to about 11% now. But we moved about 40% of the business to India, and that added incremental of almost 30%. So, initially, yes, it will be it will lower the EBITDA, but as we move forward, it will generate a lot more cash for the company.
And in the long term, India business will still be 13 to 17% as you would guide it for, right? Because if you're looking to bring these businesses into India, the contribution from India would increase as well.
Right. So what we sell in India is about 14% of our top line, at this moment, and we'll stay in the 14-15% vicinity.
Yeah. Okay. All right, Mr. Soni, good chat with you. Thanks so much for stopping by and filling us in with some details. We're going to be looking forward to that inorganic growth, and we'll be happy to host you here on CNBC-TV18. For the time being, though, we'll slip into a short break. On the other side, we'll continue to focus on markets and stock-specific action.
incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our metro, we'll be able to reduce 10, or we'll be able to save 10 lives. Once these two metro lines start fully functional, there will be huge relief. Once all these 8 to 10 lines are completed, which are going on right now.
Welcome back. Well, the markets have moved into the red, mildly so, but you have various banking and financial names that have moved lower. IndusInd Bank, Bajaj Finance. Pull up the intraday charts of some of these stocks. It'll tell you the picture why the Nifty is unable to hold at higher levels. And also a couple of heavyweight names like L&T. Well, that stock was trading in the green. That's moved into the red. ITC, that was trading well in the green, that as well has slipped a little bit. So that stock as well comes in for focus. In Britannia, the stock that was at 5,000 rupees just a couple of weeks or so ago, well, that as well has moved a little bit lower. The good news, though, is that we still have the mid-cap index trading in the green, but the crisscross lines, the advanced decline ratio that comes up for you in the screen, they were far apart. Now they have almost, kissed each other as we speak. Crisscross lines come up for you on the screen. But on that note, though, we'll have to wrap up on this edition of Chartbusters. That's it from Mangalam and myself. You stay tuned. Trading Hour comes up next.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement. Both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be, it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14 to till date, 13-14 I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the last year, it means the year which passed away just now. In that year our total production was around nearly about 834, 800. This is the ever highest. This is the ever highest. Keeping that in mind, this year also have kept the target, a very ambitious target. And production is going on accordingly. Normally April, May, June, this is the time when production is reduced. But this time it is going on very well. As far as thermal power plants are concerned, little more than 34 million ton of stock is there in thermal power plant, which is almost sufficient for 13-14 days, and around 65 million ton at the pithead, that is at the Coal India, SCCL and all those places. I feel there should not be any problem. And last year we have supplied around 13.39 million ton for the non-power sector. This year, same period I am talking, this year we have supplied around 18.8 more.
Hello and welcome to Trading Hour. It's a brand new week. The markets are extremely range-bound, very, very quiet Monday. We're not quite here in the studios because we have Rima back with us. Welcome back, Rima.
Welcome back. It's good to see you both, girls.
Good to have you back in the studios. I hope you're rejuvenated, refreshed, and raring to go. You can push the markets to the all-time high, which, by the way, we missed by one point.
Yeah. I know, I read about it. Incredible, right? But I'm just glad the monsoon is here, and it's having this rub-off impact on these FMCG stocks. So the only place where you are seeing some green today are many of these consumer names. So there's Tata Consumer, you've got UPL as well, dependent on the monsoon. You've got an ITC, HUL. That's the pocket which is firing for the market.
Absolutely.
So we've got the monsoon gods to thank.
Absolutely. So, you know, something positive, though the market overall is flat. But otherwise, just to go back to the headline story and the headline index, there hasn't been much movement or progress. You can say that. Markets are in a bit of a Monday funk. It's a very, very quiet Monday, as I was just saying. The range is very narrow on the Nifty. And it seems that this is not just India. Even if you look at global markets, most of Asia has been more down. It's not a big slide across Asia, but we're seeing incremental negativity. And this continued from the handover that we got from Wall Street, because Wall Street indices had a rough Friday again. And all three, the NASDAQ, the S&P and the Dow, they were all down in red territory. And that seems to have rubbed off, given that last week was a week of big central bank moves and a lot of these central bank hikes that came in. So the markets are still digesting that.
For the Nifty, it's critical to note that there is a big fight right now going on around the 20 DMA. And so far, the Nifty has managed to hold that level. So you're talking about 18,690. The DMA comes in at just around this mark, exactly there, 668, 18,668 to be precise. The other interesting point or trend to note is that, you remember the slam dunk on mid-caps that we had on Friday? Now, Monday, so far, there is some sign of incremental buying that's seeping in areas like defense, etc. And Pavitra will talk more about that. It's not a big, huge move. It's a more cautious approach, and that's reflecting in the way the advanced decline ratio is right now. It's quite neck to neck, the lines. It's not an outlier, huge move on mid caps as we've seen in the recent past. But I guess it's not too bad starting the week on a slightly cautious but positive footing, I suppose.
Yes, absolutely. But we've got a lot to watch, right? You've got the monthly expiry. This Thursday. Yeah. So that's something that the street will be watching very closely. But for now, things are flat. But the mid-cap index is holding up pretty smartly. Yeah. The mid-cap index is up close to about 0.4%. The advanced decline ratio currently in favor of the gaining side. Just a few heavyweights are exerting pressure. So you've got a Reliance Industries, which is virtually languishing at the day's low. L&T is struggling in trade. You've got the IT pack under pressure. So TCS, Tech Mahindra also dragging the feet today.
Oh, absolutely. You guys spoke about the mid-cap index. That is at the high point of the day while the Nifty has slipped to the low point. So I definitely think that, it is looking a little bit better there after the two kind of weakish days that we did get. Also, even considering the 2 weak days, this is still an index which is up 3.5% for the month. The small cap index, I know today it's looking a little bit flat, but for the month it's still up 4.5%. So do keep that in mind. This is the move for June up until now. Some stocks which are doing quite well. The pharma index is the top gaining sector, but even outside of the Nifty pack, you have names like Dr. Lal, Metropolis, Biocon, all of these seeing some good buying. You have a lot of the defense stocks. I know nothing new here, but Mazagon Dock is up another 7%. You have Garden Reach, Cochin Shipyard. These are just a few of the names, but these are seeing some good interest. On the downside, some of the smaller banks, the Nifty Bank has slipped into the red as well. It's absolutely at the flat line now. So a lot of these smaller names seeing some pressure. And then you have the entire sugar pack, because last week we saw that big rally on the prices, on the price increase that we are seeing globally. So today you're seeing a lot of correction come through there. But like Surbhi was pointing out, there's a lot of interest in some individual mid-cap names. So let's start off with the big mover today. Later this week, we know that ICICI Bank is set to consider a proposal for the delisting of its subsidiary ICICI Securities. The stock is up around 12%. Nimesh is here with the details. Nimesh, take us through what we know on this and why is the stock up 12%?
Well, the stock is up 12% today, but even on Friday the stock was up to 8%. So in 2 days we've seen a 20% rally on the stock, and largely because the ICICI Bank board is going to meet on 29th to consider a delisting proposal. Now, if you look at the shareholding pattern, ICICI Bank owns a 75% stake, and the 25% is with the general public. But within that, the two large holders, and that will have a big impact on the delisting as well. That is LIC owning close to 2.5%, and the government pension fund owns 3%. So they will have a big swing as far as which way the delisting goes. But the important thing is, what I understand from sources, that this is a first delisting where it will be not a cash buyout, but largely a share of scheme of arrangement. So the delisting will be through a share swap, wherein the investors will get the shares of ICICI Bank. So that is something to keep a note on. The share swap ratio will be decided on June 29 when the ICICI Bank board meets. But the delisting offer is largely because it's a share of arrangement, and instead of cash, the existing investors will get shares of ICICI Bank. So that's something to track for. But clearly, the stock is buzzing largely because of the delisting offer being proposed by ICICI Bank. In fact, not only ISEC, but it has a good bit of a rub-off on all the other broking companies as well. Most of them are buzzing in trade.
Okay, thank you very much for that. Let's just pull up Angel One to see if there has been that rub-off impact of ICICI Securities surge on that. Angel One has anyway been a rank outperformer in the entire brokerage space since its listing, which took place in 2020, a couple of years back. The stock is up close to about 400%. That's Angel One for you. That's also seen a bit of a spike. But Surbhi, you were reading this Morgan Stanley note. Just as we were entering in, you were telling us that they've written an interesting piece on the internet companies. Can you tell us the key takeaways?
Absolutely. So this is going to be, I think, a repeat feature from the House of Morgan Stanley now. They have come out with the India, it's actually an India IT report, but it's more focused on the internet companies. And they've studied the entire lot, Nykaa, PB Fintech, Paytm, etc. Basically the entire universe. They have studied these companies on 3 key parameters: growth, and they've looked at growth trends versus the pre-COVID levels and what their projections are for the next 4 years. They're talking about margins and valuations. So they studied all these companies on 3 parameters. So what came out of it? Number one, Morgan Stanley observes that companies are now trying very hard to strike a balance between growth and profitability. And we've seen that in some of the numbers. We've seen that in the commentary as well. And they're saying PB Fintech, Paytm and Zomato are actually leading this charge. And they are expecting these 3 companies to strike the best balance perhaps between growth and profitability over the next 4 years, right up to FY27. So that's the first observation. Second, they're saying there is a convergence in profitability across companies, irrespective of the stage the company is in or the rate of growth the company may be having. So even if it's a low growth company, the focus on profitability is becoming clearer and clearer. And they are expecting, this is Morgan Stanley saying, that there should be improvement in EBITDA margin led by better contribution margins for some companies like Zomato, PB Fintech, and also stronger operating leverage. These are 2. I'll talk more about this in a bit, but these are 2 reasons why Morgan Stanley is saying there should be improvement in profitability, better contribution margins, and stronger operating leverage over the next 4 years. The third point that Morgan Stanley observes is that profit upgrade cycles will be the key that will determine whether stocks do well or not, and we've seen that play out. Morgan's estimation is that in this last 6 months, if you look at stocks, we'll just pull up, actually we should pull up the maybe the 1-year chart for a lot of these. In the last 6 months, in this calendar year, for instance, Paytm is up a whopping 60%. Some of the others like PB Fintech is up almost 50%. So it's been a very good calendar year for some of these stocks. So they're saying that this is largely because of flows coming in from domestic institutions, whereas foreign investors have actually been selling down their positions in these stocks. It's the mutual funds which have started accumulating, which is behind the rally, so to speak. So those are some of the key observations that they're making.
Okay, got that. And, we have seen a lot of brokerages also write on this, right? That this trend is sort of picking up of profitability. But does Morgan Stanley see this as something that can really last longer and something that's going to be, durable?
No, that's absolutely the million-dollar question, right?
Yeah.
Can you buy these businesses for the long term? Can they maintain this sort of track on profitability? Morgan thinks yes. They're quite convinced on some of the companies. So Morgan is saying there are several factors that are leading to this improvement in profitability. Improving contribution margins, better take rates, for instance, specifically they single out Zomato on this, and then higher, revenue coming in from side businesses which are looking more profitable. This is where Paytm has been a beneficiary, and higher renewable business, which has helped PB Fintech. Then there is lower ad and promotional spends, lower marketing expenditure, which has helped some companies like Zomato, Nykaa, and Paytm. Operating leverage. Remember, I was saying that Morgan feels that operating leverage is going to be very strong for some companies. That will help them stick to this path of profitability, specifically Zomato, Make My Trip, Paytm, and PB Fintech. Whereas they're saying that for Nykaa and delivery, they're not expecting too much operating leverage because Nykaa is investing in other businesses like fashion. Delivery has some volume issues. So that's what they point out. And finally, they're saying that a couple of these companies are actually curtailing investments that they had made in side businesses, which are not now, really reaping in the profits. Just to quickly end this, Morgan is saying profitability will improve pretty much across the board for the entire internet sector. They're saying delivery and Make My Trip will be a strong play on good operating leverage in the coming years, whereas PB Fintech, Paytm and Zomato will be a play on better contribution margins over the coming years. They're expecting Nykaa to be the most profitable company on a EBITDA as a percentage of gross merchandise value, that GMV parameter, if that's what an investor wants to go with. Their top picks, in order of preference, PB Fintech, target price is 810 for the stock that they have. We'll put up PB Fintech for you. 810, Zomato is number 2 on their list, and the third one is Nykaa. And the rough upsides that we're talking about range between 11% to 23-24% across these 3 stocks.
On Friday, PB Fintech held an analyst meet. It was a virtual analyst meet, and it was held for the first time since the company went public, since its listing. So I spoke with one of the analysts to find out what happened. And they said, well, this was an analyst meet purely to showcase the company's products, the technology, how they're using artificial intelligence. It was a no numbers analyst meet. So it's not that they spoke about the numbers or there has been any change in the guidance. They were actually very tight-lipped when it came to the numbers. But some of the interesting things that the company spoke about, which is again, non-numbers, they did say that 80% of their traffic is organic. they are using artificial intelligence a lot to improve their underwriting processes, which will help in bringing down the risk. And also the companies managed to tap into many of the underserved customer segments. And that includes NRIs. Again, so this would be the affluent segment. Again, typically you would assume affluent segment would have a lower risk when it comes to underwriting, housewives, the underprivileged. So IFL is also bullish on PB Fintech. Their target price is 750. So not as high as Morgan Stanley's 810, but they also are bullish on PB Fintech, the owner of Policy Bazaar.
Well, that explains the 5% pop that we're seeing on the stock today, because you have some of these positive views that are coming in.
Yeah, absolutely. And considering just 6-8 months back, right, this was a unanimous, not unanimous, but there were a lot of concerns on the valuation front, which is why all these stocks went corrected a fair bit. Get into a break. Up next, we'll put the spotlight on gold as prices rebound from lows of $1910 per ounce.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 160,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on
Welcome back. Let's talk commodities, and the one which we're focusing on right now is gold. Manisha is here to tell us more about that. Manisha.
Thank you so much for that. Well, I'm looking at gold prices, and we did see $1,910 an ounce in the previous week. But in Asia, we've seen some buying return into these markets. That is because we are reacting to the weak PMI numbers from major advanced economies, and that's supporting buying. Also, the growth of debt globally is a number that the street is keeping an eye on. The markets did see a 2% decline in case of gold prices in the previous week. and the previous weekly decline was the most since that you have seen since the month of Jan, and that was because of the rate hikes that we saw, not just from the US Fed but Bank of Canada, Switzerland, Reserve Bank of Australia, etc. The markets do believe that the rates are going to stay higher for longer, and that is the reason many of the central banks have reduced or revised their forecast for the gold prices for the near term. For 2024, they still continue to be quite bullish going forward. If you look at MKS PAM, they look at gold prices outlook at 1878 as well as an average. We are trading at 1920 right now, but Commerce Bank continues to be quite bullish. Earlier, they had a target of $2,050 an ounce by the time this year ends. Now they have brought it down to $2,000 per ounce. The gold prices are still 5% higher in 2023 until now. For the month of May, while we saw a decline by 1.8%, for the month of June, we've seen a decline by 2.6% as well. But for the year, we're still trading in the positive.
All right, Manisha, thanks a lot for getting us that quick check on the gold prices. By the way, guys, speaking of a rebound, we've also seen quite a rebound in the Bitcoin prices. So that is up around 15% for 1 month. For the year, it's up some 80%. So there's been a huge jump there. But of course, the slide was as severe as well. So that is what is happening in terms of the commodity market action. We are going to get into a short break. But when we come back, we'll discuss the technicals. Jed Hacker of Sher Khan will also be with us to discuss his top trading bets.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so. And as you have already seen, from 13-14 to till date, 13-14, I think it was 572 million ton of the production. Today we have almost reached nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the line.
Hey guys, welcome back. You're still tuned into Trading Hour. The mid-cap index is really picking up, by the way. The market itself is broken into the green now, but the mid-cap index is up 150 points as we speak. So almost 0.5% in terms of a gain there and at the high point of the day. So do keep your eye out on this index. But let's talk about some stocks which are really moving around in trade today. We were telling you how the entire consumption pack is abuzz, and Tata Consumer is one of the top gainers as well on the Nifty. This after Citi has initiated coverage on the stock with a buy call. So Mangalam is here with the details of the note. Mangalam, what does Citi have to say on Tata Consumer?
Well, Citi says that you buy Tata Consumer with a target price of 1,020. The reason why they say that is because they value the company at 56 times 2-year forward earnings, which is a 5% premium to the historical valuations that the company has been trading. Why is it that they ascribe this 5% premium? One, because the company, they expect them to strengthen their position in their core categories. They believe their growth drivers like category formalization, market share coming in from local players, their new products on which the company has had a large thrust and expanded distribution could do well for them. In fact, new products as a percentage of their sales or growth category as a percentage of their sales was close to around 15% last fiscal. They believe this number can go all the way up to 27%. The company itself has guided for a 20% contribution coming in from these categories in FY24. As a result of all these things, they expect the company to post revenues at a compounded rate of almost 12% over the next couple of years. EBITDA expands a little faster, so we see EBITDA growth of 17%, and as a result of which the net profit grows at 22%. However, there are a couple of risks that we need to be mindful of as well. Delay in demand recovery due to El Nino is one of the big risks. Tata Consumer still has a lot of commodity exposure and FX exposure, so volatility in both commodity and foreign exchange could be one of the risks. And finally, increased competitive intensity could weigh down on their estimates as well. But for all things right now, they believe it's a buy with 1,020 rupees as a target.
Okay, thank you very much for that. Let's talk about SBI Cards and why it's been downgraded by Nomura today. Vivek is here with the details. Vivek.
Well, that's right. So, Nomura has gone ahead and downgraded SBI Cards today, and the stock is under pressure. Now, what they've done is they've downgraded the stock to a reduced rating, and they've tucked the target price to quite steeply. The target price has been cut to 700 rupees a share from the earlier 1,030 rupees that they had. What they're saying is that as far as SBI Cards is concerned, the profitability is going to remain under pressure. Also, they're talking about the entire industry, and they're saying that the credit card industry growth is moderating quite significantly, with SBI Card continuing to lose market share. Along with that, what they're saying is that the industry landscape itself is changing with an increase in riskier consumer segments, and they're saying that the benefit of the policy rate pause or further cuts that may come in on the cost of funds is yet to be realized. Now, talking about valuations on an FY25 basis, the stretched valuation that SBI Cards has at 5.4 times price to book and almost 26 times price to earnings is something that they believe does not leave much room for any error, and which is that they've gone ahead and downgraded SBI Cards today.
All right, Vivek, thanks a lot for that. The stock is down 1.4% on the back of this news, slightly off the lows. But let's get a check on the market now. Jay Thakkar joins us, Head of Research at Sher Khan, for a quick technical check. Jay, thanks for joining us. Very, very flat on the market today, just around 15 points higher there. I know all of these, global sort of factors are also playing on the market today, but how do you see it trending from here?
Hi, very good morning to you. Well, as far as the indices are concerned, I would say that Bank Nifty clearly is fitting into that range of 43,500 to 44,000. I mean, 43,000 for this week is going to be really important because we have the highest OI build-up there on the put side, and on the upside, 44,000 is clearly a resistance. So that's 500 points range. This week being a truncated week as well, traders need to watch out for those things, and I probably this is going to be the last expiry on the weekly. Bank Nifty will expire on the Thursday, maybe from the next month onwards will be out Friday. As far as stock specific ideas are concerned, I have two buy recommendations. The first buy recommendation is on, of course, Tata Consumer, wherein Mangalam also covered, Citi covering it. But then technically, this stock has provided a nice breakout from a symmetrical triangular pattern. On the lower side, one can place a stop loss at 835 and target 890 to 910 on the upside. That's a buy recommendation on Tata Consumers. Second buy recommendation which I've got is on IndusInd Bank from the banking pack. IndusInd Bank has recovered quite well from the lower levels. Now I think on the low side, 1285 is a very crucial support in the short term. So with that as a stop loss, we will buy IndusInd Bank targeting 1345 to 1360.
All right, Jay, thanks a lot for joining us with that quick check on the market. By the way, a lot of the FMCG names, Tata Consumers holding up, but a lot of the others have moved into the red right now. So Britannia at the low point of the day, Nestle at the low point, Godrej Consumer, Marico, a lot of these slipping significantly from the highs. But that is what is happening in terms of the FMCG stocks. We do need to get into a short break. But on the other side, we'll speak with Nilesh Shetty, Portfolio Manager at Quantum Advisors, for a quick check on the market.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our metro, we'll be able to reduce 10, or we'll be able to save 10 lives. Once these two
Welcome back. You're with us on Trading Hour. Our next guest is Nilesh Shetty, Portfolio Manager at Quantum Advisors. Now, Nilesh is roughly managing a $2 billion portfolio. Quantum Advisors is actually. And this is largely offshore fund. And the investors hail from North America and Europe. So it gives us a sense of how a lot of these foreigners are looking at the Indian markets right now. Nilesh, good to have you on the show. So before we dive in with your top bets, your investment thesis, let's get a sense on what the top-down view is on India at the moment, given the rally that we've seen. in April and May. A rally that seems to be sort of slightly getting a bit of wobbly, if I could say, now as we round up the end of June.
I mean, the view has not changed materially. India remains a bright spot globally. A lot of investors, especially global investors, especially after the crackdown in China, decided that they will not allocate more capital there. So these are long-term strategic investors, not tactical investors. And you saw a lot of money coming into India. A lot of them are still in early stages of deciding their allocation to India or increasing the allocation to India. But again, there is no question that they don't like the India story. It is right now very attractive relative to the rest of the world. And given the kind of performance that the market has given post-COVID and relative to other emerging markets over long periods of time, it's just been a quite structural, secular bull run in some sense, or a positive macro story for people wanting to allocate to it.
Oh, no, that point is well taken, but the only risk is the valuations, right? India has always been a premium market in terms of valuations. And now with this recent run-up over the past 3 months, it's only gotten a little more expensive. Are you comfortable with the valuations? And is there any sector where you've lightened your positions, pared down your holding because it's gotten a bit expensive and overheated?
Yeah, see, India will always be expensive relative to sort of other emerging markets, primarily because of the quality of companies that are listed in India. A lot of these even though a lot of these emerging markets are clubbed together, the nature of companies in each of these geographies are very different. And if you were to rank Indian companies on margin profiles, on return ratio profiles, India will always be expensive. What we've seen over the last few months is the strong rally in small and mid-cap space, which is again not that liquid a space, and to allocate capital there is not easy. So even a small amount of liquidity coming there sort of jacks up valuations quite materially, which is sort of a concern for us. But apart from that, the larger companies, there is still significant value. So they were cheap and they've sort of moved back to their sort of long-term averages, but it's not expensive in any way. So we continue to remain bullish and largely allocated to the larger cap space. Recently, we've sort of trimmed positions in the consumer discretionary space, primarily in a large tractor company, and a slightly lower position in sort of a two-wheeler company. So again, the style is value. So we had built up a lot of positions last year, and valuations were attractive, and these companies were trading at sort of 2-decade low valuations. But given the run-up that we've seen this year in that space, we've reduced positions there, not materially, but marginally.
Okay, so you're saying not too much of a change to your stance, or, to your portfolio as well. Of course, you did mention some of the smaller changes. We were earlier on the show going through a very interesting note that Morgan Stanley has written on the internet companies, where they're sounding quite positive on long-term profitability. They are starting to look at these. A lot of, the new age companies as well, Nykaa, Zomato, PB Fintech, all of those. Do any of those interest you now, considering that valuations have corrected significantly from the peak?
Yeah, like I said, you have to be really, really long-term in trying to decide profitability for these companies. We would rather sort of value near-term profitability for companies. So there has been significant meaningful correction, and we've been tracking that space. But when we try to model when do these companies start generating cash and throw up profits, it's still quite a while away. And a lot of that is still, even if you take current valuations, a lot of that is already in the price. So we watch it patiently, but we've never added any of these companies to the portfolio.
All right, got that. So still retaining a cautious view on some of these newer age businesses. Then let's talk old businesses and finances as old as it gets, right, Nilesh? And that's where you've had a pretty bullish call. And I think you've owned companies across the board, from banks to insurance to, I think, broking, etc. So how are you cutting this up now? Where do you find valuations still attractive within financials? And if you could throw in a specific word on life insurance, because that's where we've seen this hectic rally from the lows of February.
Yeah, so life insurance is a sector we were tracking very closely and was getting very interesting for us. Unfortunately, we could not add these names into the portfolio. They rebounded before we could add them. But we added names in the general insurance space, in the broking space, and we continue to have large positions in sort of top two private sector banks in India. So again, they've actually materially underperformed in the rally. And if you look at their valuations, they're not expensive at all. We continue to hold them. We think over the next sort of 3 to 5 years, they perhaps would lead the rally in equities as credit cycle picks up.
On consumer, where do you stand right now? The outlook just, seems to have improved now from a market point of view, given the progress of the monsoon. It's finally hit pretty much pan-India now. Do you think consumer is a space people should look at because there are tailwinds on the margin front?
Yeah, like I said, this year, a lot of the companies that were hit badly last year or due to higher raw material prices, they will show expanding margins. And a lot of the consumer companies will probably show that. Again, we have consumer discretionary names in our portfolio, two-wheelers and four-wheelers and stuff like that. But consumer staples has been very tough to justify in a value portfolio. We would like to own them, but at 60 times, 70 times earnings, you really have to take a very, very long-term view on earnings growth and stability of margins without any risk coming through to justify those valuations. So again, these are fantastic companies and everybody should at some point try to own them at valuations that they are comfortable with. For us, it's just been a valuation issue, nothing else.
Okay, Nilesh, we've been talking a lot about, some of these smaller pockets, the likes of defense, railways. Did you get in on any of those or, do you think that they still look ripe for investments at these levels? Defense, railways, real estate has seen a big run as well.
Yeah, so we did add a capital good company around that 2020 COVID crash period. And it has been it has done really well for us. And we've actually reduced a lot of our position there. Currently, valuations in that space looks slightly stretched. I mean, these are very cyclical companies and because government capex has been very strong, you've seen a sharp build-up in order book. But when you look at their valuations now, they are at the top end of where they should be trading. So right now we are just watching them closely, but nothing attractive to add in the portfolio. And the one that we have, we've trimmed it materially, actually.
Okay, all right. Good talking to you. Thank you very much for joining in, Nilesh, and we look forward to more conversations in the future.
Thanks.
We do need to take a quick break on that note with the news. The markets are still in that range, just about 22 points up on the Nifty. It's trying to kind of actually gain some more momentum on the upside, crawling its way towards the 18,700 mark now. So let's see. We'll take that break, come back with more on the other side.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it. And it is a quite motivational to all workers. And I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm. And even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind. And I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so. And as we have
Welcome back. Let's talk about the primary market. Idea Forge Technology launches its initial public offering. They're looking to raise 570 crore rupees, and this is the first drone manufacturing company which will get listed on the bourses. They primarily provide services of surveillance, mapping. A chunk of their revenue, 70-80%, comes in from the defense segment. Vivek is here with the details and the numbers. Vivek.
Well, that's right. It's a very interesting company, that's up for subscription. Like you mentioned, Idea Forge, it's the largest drone manufacturer. It's almost a 50% market share as far as the Indian market is concerned. As you mentioned, the issue opens today, ends on 29th, and the offer price is between 638 at the lower end of the price band to 672 rupees a share at the higher end of the price band. So the issue size is a total of 570 crore, where the primary issue or the fresh issue is of close to 240 crore, with the remaining being an OFS or an offer for sale by the promoters. What is the company raising funds for? From the fresh issue, they are looking to repay debt, fund working capital, as well as to invest in newer product developments. Now, talking about the company itself, the company actually had a 50% market share in drone manufacturing in FY22 in the Indian market, one of the largest players within the Indian market. And even globally, they are ranked 7th in terms of dual-use category, that is both civil as well as defense drone. Motilal Oswal has written a note. What they're saying is that you could subscribe to this particular issue given the fact that you are likely to get a listing pop. They like the company given the complex, wide product portfolio, presence in a niche space, strong client relationship with high entry barriers. Along with that, what they're saying is that the issue is actually quite reasonably valued at 5 times price to book value, which when compared to peers that actually trade between 8 times to 10 times book value on a post-issue basis, they believe it's a fair valuation, and which is why they like the company. Now, talking about the revenues, FY23 company saw revenues of close to 186 crore, profitability of close to 32 crore, EBITDA of 47 crore, and margins close to 25.3%.
Okay, that does sound pretty impressive, as you point out, and that valuation number is amazing. That valuation table told us that Idea Forge is actually right at the bottom compared to some of the other peers in the defense and aerospace tally. There you go. See, Zen is at about 10 times, Paris is at 6 times, and Idea Forge offered at 5 times. Though, of course, businesses are different, not exactly comparable, down to the last instrument that they're making, but roughly speaking. Well, earlier we did catch up with the Idea Forge management, Ankit Mehta, as well as CFO Vipul Joshi, to discuss how they're looking at the business and what their big priorities are. Take a look.
In terms of responses to the to the regulators, we have already placed most of our responses to the regulators as well. And in terms of other facts, we do not have any facts supporting a lot of other claims. We have reached out proactively. When we look at the market opportunity, right, what has happened is that over the years, in fact, particularly post the pandemic, the opportunity has actually started to shift from being a good to have technology to a must have technology. And with the amount of impetus that both the government and the policy is doing for the industry, at this point in time, the potential is looking very exciting.
Our revenue is distributed between a defense and civil is how we demarcate the market today. Large part of past few years, revenue has been defense, while we see that the civil share will slowly increase.
Okay, that's Idea Forge, soon to be the new kid on the block. Well, now let's go back to one of the big boys from the IT space, and we're talking about Infosys. The reason that stock is on the radar is that Infosys has won a $454 million deal from Nordic Bank. Rima, do tell us, it sounds like a decent-sized deal for Infosys.
It's a large deal, right? So the name of the bank is Danske Bank. I hope I'm pronouncing it right. But it's a Nordic bank, let's say that. And they have appointed Infosys as a strategic partner to accelerate their digital transformation. The estimated deal value is $454 million for a period of 5 years, with an option to renew it for an additional year for a maximum of 3 years, which means totally it can be renewed up to 8 years. But for 5 years, the value of the deal is $450 million. We're looking at annual revenues of $90 million. As a part of this deal, the company will also acquire the captive center of this bank. So this company, Nordic Bank, Dansk, has a IT facility from where they used to do all their IT work. It's like a captive BPO center in Bengaluru where they had 1,400 employees. Now Infosys will take over that captive center and then provide all the IT requirements for this Nordic Bank. The cost of acquisition of that IT center is about 16.3 crore rupees, and the transaction is expected to be completed before Q2 of FY24, so which means in the next about 3 months. So that's the latest.
Okay, so that is the latest on the deal. But also, while you were away, I'm sure you, were tracking this even while you were away. But there were a bunch of exits last week, and also we have been talking about a slew of exits at Infosys anyway, right? A lot of the management has joined other other big tech companies. Why is that happening, and is there a big risk from this?
They seem to be becoming the HUL of the IT sector now at this rate. But yes, tell us more.
Well, so last week only there was a newspaper report that two senior executives of the company. One of them was a head of cybersecurity. His name was Vishal Salvi, and the other one was a head of cloud and infrastructure. He was also the EVP of the company, Mr. Narasimha Rao M. Manipali. So these two people stepped down. I reached out to the company and they said, I don't think they classify as a KMP, which is why it's not been disclosed to the exchanges. But yes, they have, stepped down. So these are two senior level exits. But as you pointed out, right, it doesn't end here. Over the past many months now, we've seen quite a few exits. Mohit Joshi was the president. He's now going to be the CEO of Tech Mahindra. There was Kapil Jain, who was the BPM head.